All right, folks, good afternoon. Let's go ahead and get airborne with their multi-speaker event. It's going to be an action-packed day, a lot going on in the market. I'm just going to get out of the way and introduce Stephen Brooks from Stony Brook Securities. He's going to talk about drag and drop strategies, which allow you, beginner, pro, anybody, to get sizable returns by finishing the year with a strong Q4. So, Steve, I'm going to get out of the way, and you got an hour, my friend. I'll see you in a little bit.
Okay, folks, just want to verify that the audio and the visual are all working. So if you can see my screen, which is a photoshopped photo of me on the right-hand side of the screen, some words on the left, and you can hear my voice, just let me know in the chat box right now. Give me a yes, give me a one, give me a hello, give me a anything at all. Just let me know that everything is working 100% before we go ahead and get started, because once this train leaves the station, we don't want to stop. So I don't see anything in the chat. So again, just one person, please let me know that this is all working before we go ahead and move on here. Okay, very good. So here's the deal, folks. We all kind of know that there are two groups of people when it comes to investing in the stock market. And you have this first group, and they have shiny object syndrome. They chase every strategy and tactic. They try to day trade, and they buy high and they sell low. Now, the second group, they're patient. They're conservative yet consistent. They go for the best resources, the best knowledge, and the best strategies, and they are selective. Now, that second group, that is a group that I've been in part of my investing career. And after learning about who is going to be attending this training here today, I know that you too are part of that second group. And because you're part of that second group, I have something that I think is right up your alley, because this is the kind of stuff that we look for. So here's what you're going to learn during this training. You're going to learn how to beat the market and invest in just one day a week. But you already knew that, right? You're also going to learn how the top 1% of all investors are able to make money each and every year. And trust me, folks, you can absolutely achieve that as well. I'm going to show you how to profit while completely bypassing having to know about charts, balance sheets, Fibonacci, trend lines, indicators. For what I am teaching you on this training, folks, you do not need to know any of that whatsoever. And finally, I will show you how to scale up your investments and put it all on semi-autopilot. Now, my big promise to you for being on this training with me right now is, first of all, you're going to have a blast, folks. This is a ton of fun. You are actually going to get taught a few things rather than me talk about a lot of high-level fluff and concepts. Now, if you are new to the stock market and you commit with me for the next 60 minutes during this presentation, I promise not only will you feel the stock market is way simpler than you thought, but you'll be able to start making your first profits immediately following this training. Now, I know we have a lot of veterans on the training here today. So for you too, if you commit with me for the next 60 minutes, I promise you'll be able to add these methods to your already arsenal of ideas. Right? But why is this important? Why is this a big deal? Well, if I give you one idea today, folks, okay, just one solid idea, it could very well change your financial future, because the reality is you are just one trade away from financial freedom, and I hope to be able to share that with you right here and right now. But first, I want to make sure you're in the right spot. Well, if you are new to the stock market and you want to jumpstart your success, then this is for you. If you are an experienced investor and want a big-time income boost, not an okay or a marginal income boost, I'm talking about a big one, then this is for you. Now, if you want to supplement or replace your current income, or if you're looking to achieve financial freedom, then you are in the right spot. And finally, if you need a specific step-by-step plan and want to avoid learning it on your own, then this is for you. This is something anyone can do, even very part-time. Now, guys and gals, I hope you're starting to feel like you're in the right place. So if you are in the right place right now, give me a big fat 4 in the chat. I want to make this as interactive as possible. So please give me some 4s in the chat if some of this sounds pretty good to you right now. So I see Derek, I see Leslie, I see Rodney, I see Mark, I see Johnny, I see Brian, I see a ton of people. Fantastic, here we go. Now, my goal for this training, folks, is to make this training worth at least $5,000 to your investments. I'll repeat that one more time. My goal for this training is to make this training worth at least $5,000 to your investments, okay? And look, these are some of the exact same strategies that I use, and they work. So there's no doubt in my mind that you're going to get that kind of value out of this training if you commit with me. So my ask is that you treat this training as if you paid $5,000 to learn this. And what this really means is, look, I know there's every opportunity in the world to be distracted from what we're doing here right now. But if you want to get that $5,000 of value, you have to commit with me right here, right now, and limit those distractions. Now, full transparency, I don't want anyone to have any anxiety about what will happen at the end of the training. We do have a community called Market Hero that I will extend an exclusive invitation to you for being on the training with me today. But you should know that if you want to come on board at the end of this training, there's going to be a ton of incentives and a giant discount, which I want to go over very, very quickly. So Market Hero, everything you need to make money and save time doing so in the stock market. Now, this is the single biggest theme for the training which you are on right now. Making more money, saving time doing so. You're also going to get lifetime access to our private Facebook mastermind group and our weekly live trainings. Now, on my website right now, this currently retails for $5,000, okay? But again, there's going to be a lot of incentives and a giant discount at the end, and the decision will be completely up to you, but I want to be 100% transparent so you can focus on the training and not worry about what comes next. And again, I promise you that if you pay attention to this training, you are going to get that $5,000 of value out of this training. Does that sound like a fair deal to you? Thank you, Susan. Thank you, Leslie. So how's this bad boy going to work? Well, first of all, I'm going to tell you a little bit about who I am, maybe 30 seconds worth. Then you're going to hear from a few of my clients and students, and you're going to learn what they did to crush it in the market. And folks, trust me, you can absolutely do it too. Now, here's the deal. Our most successful trainees have been our most active trainees. So feel free to ask away. And the way we're going to do that is we're actually going to pause a few times during the actual training to make sure that we are answering some questions that are pertinent to what we're talking about at that point. And then if we don't get to your question during the actual training, we will stay on as long as we can to make sure everyone's questions are answered. So who's the Stephen Brooks character? Yes, that is me in the top right corner of the screen. I'm a former professional baseball player, and I did play in the Kansas City Royals organization. And that was a former life. Since then, I've made over $1.4 million of profits in the stock market. I'm currently an invested coach for clients all over the world who have a combined $21 million under management. I'm also a traveler, a sports fanatic, and a foodie. Now, really quickly, what makes this presentation different than all the other ones you've been on before and all the other ones you will be on in the future? Well, here's the deal. We're not going to talk about charts or balance sheets, right? Or the Fibonacci or candlesticks or technical analysis. We're not going to talk about any of that. Everything that I teach you can be implemented immediately by a beginner or expert. And the way we do that is we focus on unsexy, quote unquote, less risky methods that have worked for years. And as you all will see, are backed by years and years of data. And it's totally okay that I teach you all this because, as we all know, the stock market is a multi-trillion-dollar industry. So the profitability of these trades are unlikely to change anytime soon. Now, the lawyers make me do this, but you all know the drill. This is not a get-rich-quick type of thing, okay? All of you understand that. I don't think I need to go into any more detail. There's nothing in life that's get-rich-quick, okay? This is not effortless earnings. You will need to pay attention during this training. You will need to ask questions if you have them, and you will need to take action on these methods following this training, okay? But just because these methods are less risky does not mean that they're risk-free. And finally, my results are not typical. However, I will walk you through some of the methods that I am using to get great results, but please understand my results are not typical. So here's what you're going to discover on this training. You're going to discover 2 setups. So what's a setup? Well, imagine you're sitting in your car and you're at a red light. You're not going anywhere. You're just sitting there. All of a sudden, the light flashes green. That is the setup. And what happens when the light flashes green or the setup reveals itself to us? Well, we go ahead and drive on through the intersection, okay? That is the simplicity of these methods. And as you can see, this is really short by design because we're taking all the hype and all the fluff and we are completely removing it from this presentation, okay? This is an instructional training with pure value, and it's kind of how simple my system is. Now, here's the deal, folks. Before we get started, I want you to know these methods, they work hands down. They work for me, and they work for hundreds of people before you. So I need you all to promise me something. I need you all to promise me that after I share my top secrets with you, that you are going to go out there and take action on them immediately following this training. Okay, so give me a 5 in the chat right now if you promise to take action on these methods immediately following this training. Let me see who the action takers are right now. Very, very cool. So I see Jonathan, I see Brian, I see Madison, I see Jeremy, I see Bobby, I see Billy, I see John, I see Susan. Very, very good. I see Peter, I see Matthew, I see Mark. Fantastic. So we have a lot of action takers on the call. That is fantastic, fantastic, fantastic. Here we go. Setup number one, and I called this the weekly setup. Now, here's a current student of mine by the name of Matt. Now, Matt came to one of my trainings back in December of 2017. So about a year and a half ago, and he was interested in learning how to make money in the stock market as a ways to achieve financial freedom. Now, financial freedom to this young man meant getting rid of his $55,000 of student debt. So he came to the training again back in December 2017, and I taught him this weekly setup, which again is the exact same method I'm going to share with you in about 30 seconds time. So he went out, and all he did in 2018 was this weekly setup. So when I talked to him a couple of days ago, I said, hey, big guy, I'm giving a presentation to some awesome investors and traders. How did you do in 2018 with just the weekly setup? And he said, in 2018, my first trading year ever, I had a positive return and dominated the market. I can't believe I made money in that nasty bear market. So actually this morning, I woke up really early and I went and crunched the numbers myself to see exactly how he did, looking through all his account statements just on the weekly setup. And it turns out Matt actually had a 102% return in 2018. Fantastic, fantastic return. So how did he do it? Well, here's the deal. When breaking down stock market returns, it turns out that there are days of the week which are consistently profitable and also beat the market. Now, in order to locate this profitable setup, we must figure out what days they are. And the good news for you is we have. So in breaking down the profit and loss by day in the overall stock market, we have found a winner. Now, what are we looking at here on the left-hand side of the screen? We are looking at S&P 500 returns from 2000 to the beginning of 2019. So 19 years worth of data. Now, really quickly, what is the S&P 500? It is an index of 500 US-based stocks from many different sectors. So it's a very good summary of what the overall stock market is. Now, the black line is that S&P 500, okay? So those are the returns from 2000 to 2019. And then we have the red line, which is Tuesday. We have the blue line, which is Thursday. We have the green line, which is Wednesday. We have the gray line, which is Monday. And we have the gold line, which is Friday. Very simple, very, very straightforward, folks. It's very clear to me at this point, and I know it's clear to you, that since 2000, and 19 years worth of data, investing on Tuesdays only would have resulted in an investor beating the overall market. Okay, just like Matt did. So how do we do it? Well, what we're going to go ahead and do is before the market closes on Monday, now the market closes at 4 p.m. Eastern time. So before that happens, we're going to go ahead, we're going to log into our online brokerage account. We're going to type in just those three letters, SPY, and we're going to click that big green button to buy as many shares of that stock as we can. That's how we get in. Okay, well, how do we get out? Well, before the market closes on Tuesday, we're going to log back into our online brokerage account. We're going to type in those three letters again, and this time we're going to click those big red buttons to sell all the shares that we bought the day before. Okay, so one more time, folks, at the end of the day on Monday, we're going to buy. At the end of the day on Tuesday, we're going to sell. And again, folks, you just saw how it's worked very well for the last 2 decades. So we're going to repeat that, right? We're going to set up these weekly reminders on our phones, on our calendars. We're going to add sticky notes to our computers. But let me ask you a question, folks. Beginner or pro, be honest. Can you do the weekly setup, right? On a Monday, can you log in? Can you type in just 3 letters? And can you click those big green buttons? And then at the end of the day on Tuesday, can you sell? Because if you had done that since 2000, you would have beaten the overall returns of the stock market. Now, I see a lot of people like Billy, like John, like Brian, asking in the chat right now, well, how does this strategy work in a down market? We'll take a look at the screen right here. If we look at the financial crisis of 2008 and 2009, as the black line, the S&P 500, was selling off and selling off very hard, not only was Tuesday not selling off, but it was in fact doing the complete opposite. So while the market was selling off very hard in 08 and 09, Tuesday was rallying very hard. And last year was not a straightforward year either. We remember some of these headlines. Stocks plunge as market enters correction territory. Dow plunges 1,175 points. Worst point decline in history. In fact, that week, the S&P 500 was down 5.16%. But what do you know? Tuesday up 1.74%. Or even worse, the week of March 19th, S&P 500 was down 5.96%. But wouldn't you know, folks, Tuesday was the only green day, okay? But that's not all, folks. Tuesday, yes, beats the market. But Thursday's not too shabby. It doesn't beat the market, but it's still quite a positive day. Wednesday doesn't break the bank, and Friday is just kind of a miserable day, especially last year, for example. So within this, there's a multitude of different strategies that you can take advantage of. And on top of that, yes, we can go out there and just buy SPY, but we can also use other products like Mary Lou is talking about in the chat right now. She's asking about options. In 2018, if you had bought calls on the weekly setup, you would have had a 187% return. If you had bought call spreads, 144% return, or selling puts, a 49% return, or selling put spreads, a 102% return, like Matt did, okay? And if we compare that to the S&P 500, which was down 6.24%, any way you would have cut it, you would have absolutely dominated the market. And that was last year. What about 2 days ago, right? May 14th, the S&P 500 on Tuesday was up 22.54 points. Okay, so yes, if you bought SPY, you would have made a couple $100. But again, if you bought calls, $100 turned into $756. Again, folks, 2 days ago, $500 turned into $3,780, okay? And yes, you can buy calls, or you could have bought call spreads, for example, where $100 turned into $300, where $500 turned into $1,500. Again, folks, imagine how much money you would have made just 2 days ago if you had known this strategy, okay? Like a lot of my members did. Here's David. He says, this is the easiest 24 hours of my entire 25-year trading career. I bought when you said, sold when you said, and made the most amount of money I ever had in a 24-hour period. I'm going to take the extra cash and take my wife out for a nice lobster dinner this weekend. You got it, buddy. You deserve it. Or what about Kenneth? He says, Steven, this was so simple, and it was exactly like you said. I bought on Monday PM and sold on Tuesday PM and made a grand total of $1,890 while only risking $250, which may not be a lot to you, but is huge for me and my family. Keep them coming. You got it, Kenneth. Okay, folks, that is the weekly setup. If you have any questions right now, do me a favor, pop them into the chat, and I'll be happy to answer any and all questions we have before we go ahead and move forward here. Okay, first question from Jeremy. Steven, which expiration are you talking about here? Well, here's the deal, Jeremy. Let's kind of think this through. If we are going to do a trade, right, which talks about being long basically from the end of the day on Monday to the end of the day on Tuesday, right? Think about this. If we want to go ahead and use an options trade to go ahead and take advantage of that, the expiration that would make the most sense is the expiration which expires closest to the end of the trade, right? So if the trade is done at the end of the day on Tuesday, and we do something like SPY, the weekly expiration on Wednesday would be the one to go. Does that make sense, Jeremy? Cool. Question from Marianne. Can I do this with stocks? Yes, absolutely, Marianne. Maybe you came a couple minutes late. So SPY is the ETF for the S&P 500. And if you had bought just 100 shares of that stock 2 days ago, you probably would have made about somewhere between $200 and $300. So yes, you can totally take advantage of this via stock. As you can see, you could totally take advantage of this via options. And these are the results from 2 days ago. Or if you're a futures trader, for example, you could absolutely take advantage of that there. Very, very cool. David says, I'm kicking myself. Wish I knew this a couple days ago. I would have crushed it on Tuesday. Well, that's okay, David. You have plenty more opportunity where that came from, I'm sure. Very, very cool. Very cool. Question from Marianne. How do you get a chart like this? So without getting into too much detail, Marianne, I employ a decently sized data team. So I purchased market data from various exchanges, and then I'm able to own that data and I'm able to crush that data however I please. So I give it to my data team and they do things like this. So I'm afforded the opportunity to have a data team to be able to crunch these numbers. And we have plenty more where that came from too. Very, very cool. Okay. I don't see any other questions, so I'm going to hang around for maybe 10 more seconds, have another swig of water here before we go on to the next bit of content. But give me a 77 in the chat if you loved what you saw so far with the weekly setup. Yeah, exactly. We got Kate, we got Meredith, we have Mike, we have Brian, we have Mark again, we have Billy this time, we have Carrie, we have Madison. Yeah, there's a ton of people. That's fantastic, fantastic, fantastic. Okay, that was setup number one. Here's setup number two, and I call this the trend setup. Now, here's a current student of mine by the name of Bob. Now, I met Bob years ago. We're talking like 7-8 years ago through a former baseball players alumni network. You can see he's a Chicago Cubs fan. And Bob was interested in making money in the market, but he didn't know if he had enough time to devote to it, which is how a lot of us feel. So I said, hey, Bob, let's meet up on a weekend on like a Saturday morning. You know, if you like what you hear, great, we can set up some sessions for later on. And if you don't like your session, some of the things that I say, no harm, no foul. And Bob was, really interested in making money in the market as a way to supplement his income because he had not gotten an increase in his salary over the last decade. So I had to come up with a strategy that was perfect for that. Thus the trend setup. So I taught him the trend setup, which again, you're going to hear about in about a minute's time. And he said, you know what, Stephen, you're right. It does only require me to look at the market for just a handful of minutes every single week. That's something I can do. Let's definitely set up some sessions for later on, and we will go from there. So we taught him this. It was great. I went out there. I hope Bob went out there and was doing it. But the problem was, Bob never showed up to any of our other trading sessions that we had actually scheduled together. And I couldn't believe it. I was totally crushed. I was using the trend setup. It was working for me, and I had so much more where that came from. I couldn't believe Bob had blown me off like that. So finally, like a year or two later, I get an email from him. And he says, hey, Stephen, I'm really sorry for blowing you off, but the reality is I never needed to meet with you ever again because I made 41% investing in the last year just using the trend setup. Give me a 41 in the chat if you would like to make 41% on your investments in the next 12 months. Yeah, look at all those people blowing up the 41s in the chat. We got Marilyn, we have Jay, we have Joe C. Very, very cool. We have Mark, we have Susan, we have Matthew, we have David, we have Akbar. Yeah, we got a ton of people. Those are fantastic results. Who wouldn't want results like that? So here's the deal. When breaking down stock market returns, it turns out that there are weeks in every year which are consistently profitable. And you'll be surprised just how small the drawdowns actually are. Now, in order to locate this profitable setup, we must figure out what weeks they are. And the good news for you is we have. So in breaking down the profit and loss by week in the overall stock market, we have found a winner. Now, what are we looking at here on the left-hand side of the screen? We are looking at those same S&P 500 returns, but this time from 1990 to the beginning of 2019. So 29 years worth of data here. Now, it's broken down by two ways. First, the gray line. This is your S&P 500 returns, your stock market returns. So if you bought on January 2nd, 1990, you would have made a bunch of money, lost half. Made a bunch of money, lost half. Made a bunch of money, and again, who knows exactly where we go from here. Now, that was the gray line. The orange line, and do not worry and don't freak out if you don't understand this perfectly the first time. I'm going to repeat this a few times. The orange lines are weekly returns, which followed a drawdown of between 0.5% to -3%. So we went back in the data all the way back to 1990. And if there was a week in the S&P 500, which was down between 0.5% and -3%, we would buy and hold for the rest of the week, okay? Now, it's very clear to me, and I know it's clear to you at this point, that since 1990, okay, it's a long time, folks, investing in weeks following a drawdown of between 0.5% to -3% would have resulted in an investor getting market gains without any of the major losses. So how do we do this? Well, what we're going to go ahead and do is when the market opens on a Monday morning, or before the market opens on a Monday morning, we're going to check and see if the previous week was down between 0.5% to -3%. And if it was, we're going to type in those three letters again and click those big green buttons to buy as many shares of that stock as we can. That's how we get in. Okay, well, how do we get out? Well, if we did buy on a Monday morning, we're going to hold for the rest of the week. And before the market closes on Friday, we're going to sell our positions. So let's repeat that one more time. 9:30 a.m. Eastern time in the morning. We're going to buy as many shares of SPY as we can if the previous week was down between -% to -3%. Okay, and if we do buy on a Monday morning, we're going to hold all the way to the end of the day on Friday, and we're going to sell our position before the market closes on Friday. And again, folks, this has worked very well for the last 3 decades, so we're going to repeat that. So we're going to set up these weekly reminders on our phones, on our calendars. We're going to add sticky notes to our computers. But let me ask you a question right now, folks, beginner or pro. Can you do the trend setup, right? Can you log in on a Monday morning? Can you see what the market did the week before? And if it was down between 0.5% to -3%, can you buy? And then before the market closes on Friday, can you sell? Because if you had done this strategy since 1990, you would have gotten market returns without most of the major losses. And drum roll, please, returns of over 1% per week. In fact, here's how the numbers actually break down. Over the last 30 years, the average percent gain per week in the S&P 500 was up 0.20%. Not bad. However, if you compare that to the trend setup, which was up 1.21%, 6 times greater return. The largest 1-week loss over the last 30 years in the S&P 500 is down 9.03%. But if we compare that to the trend setup, down only 2.21%. And I see Jeremy's going wild in the chat right now. He's saying, well, what about in bear markets? Well, during the financial crisis of 2008 and 2009, okay, when the market was selling off, in fact, when the market was down 50%, not only was the trend set up not selling off, but it was actually profiting at will. And that's not all, folks, okay? Last year, we saw the trend setup occur 9 times, okay? We had 7 winners, and we had 2 losers. We had an average return per week of over 1% for a total return of 9.27%. And if we compare that to the S&P 500, which was down 6.24% last year, okay? And again, that's not all, folks, because last year, if you had bought calls using the trend setup, you would have had a 147% return, or buying call spreads, a 75% return, or selling puts, a 41% return, or selling put spreads, a 108% return, okay, folks? And again, now that was last year, okay? If we recall, last week, the S&P 500 was down 2%, which falls into our category of if the market is down between 0.5% to -3%. So on the open this week, we went ahead and we got long because of our trend setup. And right before I went on live, since the open on Monday, the S&P 500 is up 32.78 points, okay? So if you bought stock, you'd be up a few $100s. But again, you could buy calls on this because so far this week, $100 has turned into $285. $500 has turned into $1,425 via buying calls. On buying call spreads, for example, $100 has turned into $250. $500 has turned into $1,250. Let me ask you a question right now or in the chat. If you knew this strategy this week, give me a yes in all caps if you would be crushing it so far this week just by following my trend setup. Yeah, exactly. So I see Jeremy, I see Billy, I see Michael, I see Stephen, I see Gregory, I see David, I see Gina, I see Mary Ann, I see Madison again, I see Akbar again, I see Jonathan again, I see John E, I see Brian, I see Susan, I see Larry again. Absolutely, absolutely, folks. Fantastic, fantastic, fantastic. You all would have absolutely crushed it, just like my members did. Martha emailed me last night. She says, Stephen, I told you on the webinar I attended a few months ago, I thought the trend setup was too good to be true. But sure enough, the first time I tried it this week, I have made over $4,300 profits, okay? And that was just one person. Here's Scott. He says, I am doing amazing. I am making over $1,500 so far this week. I can't believe the timing. It was like right at the open. Everyone was buying, and they haven't stopped, which has been good for me. Ha, ha, ha. Okay, folks, that is the trend setup. If you have any questions right now, do me a favor, pop them into the chat, and I'll be happy to answer any and all questions you all have about the trend setup before we go ahead and move on with the rest of the content. Thank you, Susan. Thank you, Lisa. Thank you, Matthew, for the kind words in the chat. Okay, first question. What if the market is down more than 3%? So look, if the market's down more than 3%, there's other things to do, but specifically about the trend setup, it's got to be down between 0.5% to -3%. Okay, last week the market was down like 2.10%, and that's why that gave us a buy signal this Monday, and we are seriously reaping the rewards of that. So if it's down more, that's not this trade. There's other things to do potentially, but that's not what this is. Cool. Very, very cool. Steven, do you send out alerts to your members of Market Hero when the trend setup is to go? Yes, we do. Absolutely. Excuse me. Absolutely. We're getting a little bit ahead of ourselves. But yes, every single Monday that the trend setup is to go, yes, we absolutely do send that alert to our members of Market Hero. We don't want them to have to go do all the digging and figuring out, what the returns were the previous week. We just let them know. And so far, we are 3 for 3 in 2019, which has been fantastic. Cool. Steven, how do you calculate weekly returns? So I calculate weekly returns Friday to Friday. So however the market closed on Friday to however the market closes the following Friday, right? To me, that is a weekly return, right? So again, last week it was about 2.10%, and here we are today sitting on a giant profit just by following this very rule-based and simple trade. Very cool. Question from Marianne. Steven, this is the most simple and most amazing trade I've ever seen in my life. How and why are you giving this to us for free? Well, thank you for the kind words. I'll say a couple of things. Number one, I really love teaching this. I really love teaching this. Number two, look, the market is so big. There's so much money being sloshed around every day in the market. It would take, you got to think like tens of billions of dollars all following this exact same strategy at the exact same time for all of a sudden this to become a little bit more saturated, right? So if the people who are on this training right now know it, it's not that big of a deal to me. And then on top of that, I have so much more where this came from, it would like make your head spin. So it's no big deal that I share this with you, but I appreciate the kind words. Very, very cool. Question from Brian, which options expiration? So think about this again, Brian, just like we did for the weekly setup, right? If this trade calls for getting long on a Monday morning and holding to the end of the day on Friday, then we would go ahead and use the expiration, which expires closest to that trade being over, right? So those Friday expirations, those weekly expirations would be fantastic for this. And the results that you're seeing for literally this week, these were done in putting options in the Friday expiration. Cool. Very, very cool. Let me see one last question here. Steven, can I use this for a stock? Yes, absolutely. Again, SPY, if you bought SPY, you'd be up a couple $100 this week. Absolutely. Yeah, very, very cool. Very, very cool. Okay, folks, and again, if I didn't get to all your questions, we'll do a much longer Q&A at the end to make sure everyone's questions are good answered. But I'm just going to take one last swig of water before we move on to the next piece of content. If you will all do me a favor at this point, okay? If you have learned something new on this training, if you had an aha moment, if you like what you've seen so far, if maybe you are starting to figure out that there's a better way to go about it, give me a 1 in the chat if you fall under any of those categories, just so I know we're still moving down the right track and everyone's really understanding and loving this material. So if you fall under any of those, give me a big fat 1 in the chat right now while I take this one last swig of water. That is awesome. It looks like literally 80% of you like it. Fantastic. Thank you, everyone. There's way too many to name your names, but I really appreciate the kind words. Okay, folks, let's recap where we are at this point. We first talked about the weekly setup, right, which talks about Tuesday over the last 2 decades has beaten the overall returns of the market. So the way we do that is we get long exposure on Monday, and we sell at the end of the day on Tuesday. And it was incredibly profitable literally 2 days ago. And then we talked about the trend setup, which talked about the idea that weeks following a drawdown of between 0.5% to -3% not only have beaten the overall returns in the market over the last 30 years, but their drawdowns have been very small. And we all just saw just how lucrative this exact method has been so far this week. Now, at the beginning of this training, I promised you that you would learn new ideas that would start making you money immediately, whether you are a beginner or a pro. So I have to ask you, folks, was our time together valuable? Did you enjoy this training? Do you understand now how I'm able to do what I do in the stock market, and some of my students are able to get those big time results? And can you see how these setups will allow you to profit immediately, whether you're a beginner or a pro? And do you see how little time and knowledge is really needed to invest? Now, here's the deal. I have complete confidence in you because you all promised me that you were going to go out there and take action on these methods immediately following this training. And while we did spend about 40 minutes together, there's only so much we can go over. Imagine spending more time together, you and I, how much more valuable that would be to you. Now, in the beginning, I also promised you an opportunity to join me in taking your next steps together by becoming a member of our Market Hero community, which is designed to give you the exact step-by-step formula for crushing it in the market and achieving mountains of success. Because here's the deal, folks. The weekly setup, making a lot of money this week, beat the market last year, and has beaten the overall market over the last 2 decades. The trend setup has beaten the market over the last 3 decades and is making a lot of money for myself and my members this week. But I have to tell you, these are only the tip of the iceberg. And Market Hero is designed to get you results big and fast. So why wouldn't you consider something that would practically guarantee your success? Which is why it's my pleasure to extend an exclusive invitation to stock market dominance by becoming a Market Hero today. Now, over the next 5 minutes, I'm going to go into depth about what Market Hero is. And if you think it's right for you folks, I want you to get it. And if you don't, I don't want you to get it. Plain and simple. Does that sound fair? Thank you, Rachel. Thank you, Bobby. Thank you, Susan. Thank you, John. Yes, they say that sounds really fair. Tell me more, please. All right, here we go. Now, if you want to achieve true financial freedom or supplement your current income, or take parts of the profits that we're getting of up to 10.37% per trade, and you want to do it all by following a proven, modular, step-by-step framework that will leave no guesswork, even if you're a complete beginner, then Market Hero is specifically for you folks. So here's what's finally going to work for you. The first thing you're going to get are my profit-crushing setups, so you can make a lot of money. Now here's 3 of them. Setup number 3 is profitable 91% of the time for an average of 10.75% ROI, and this is a once-a-month trade. And folks, I want to be super clear about this. We are doing this literally today. Here's TC. Last month, he made $1,700 overnight by just following this trade, which again, we're doing literally today. Or Ron, he says this is a very easy trade to do with very limited market exposure. He made $900 less commission, and he's super happy. Or what about Ben? He says, I more than made up my membership with this trade, and he's looking forward to more good stuff. Again, folks, this trade we are doing today. We also have setup number 7, the 15-minute window each trading day since 2009 that is responsible for 49% of all market returns. Now, in April, one of my members by the name of Lee, he tried this out. So he logged into his account at the same time every single day, bought the same stock, held it for 15 minutes, and sold it for 15 minutes later. And he made $4,000 profits just from this one trade 15 minutes a day. Would you agree with me that this is yet another example of making more money and saving a hell of a lot of time doing so? Absolutely. We also have setup number 14, the 8 days of the year responsible for 36% of all market gains, and we profit in less than 24 hours. John recently made 42% in one day. Silvio recently made $2,800 in one day from this just one strategy. Or what about Satyajit? He made 28.4% in one day recently just from this one strategy. Now, the really cool thing about these profit crushing setups is not only are they going to make you a lot of money, but they're going to save you a ton of time and money by getting rid of those newsletters, those books, that financial advisor, those newspapers, those things that never made you a dime in the first place. In fact, our average Market Hero member saves $213 a month because they get to get rid of all the stuff that never made them a dime in the first place. Now, it's very, very important to me. It's critical, actually, I would say it's vital to me that every single one of our methods can be done in every single type of account. Cash accounts, retirement accounts, margin accounts, big accounts, small accounts. It doesn't matter whether you have $250 in your account or whether you have $250,000 in your account, okay? You can participate in everything that Market Hero has to offer and all of our 8 dozen plus methods. We have a ton of methods, okay? So again, you're gonna get those profit crushing setups to make you a lot of money. You're gonna also get automation tools to save you a ton of time and allow your software to work for you without you actually having to be there to click the button all the time. And our members who have full-time day jobs love that one too. You're also going to get my done for you tools and cheat sheets and my morning game plan, which I want to go over very, very quickly, okay? Here's one of our many Market Hero cheat sheets. And what it is it just asks you 3 questions about any stock. Any stock at all. It just asks you 3 questions about any stock. And based on your response to those 3 questions, it will reveal to you which one of our 8 dozen plus methods are the right one for you to do at that time. So when you're thinking about these cheat sheets, like imagine you're sitting at home and you're trading all by yourself. But with these cheat sheets, it's really like I am standing over your shoulder telling you exactly what I would do. It completely takes the guesswork out of what setup to follow. It's a step-by-step, handheld as investing comes. Now, if you're like me, every single morning you wake up, your hair's on fire, you don't even know where you are, you don't even know what day of the week it is. But if you're also like me, the first thing you do is you're going to turn on over and you're going to take a look at your phone. And what you're going to get from me every single morning is a morning game plan. So let's think about our favorite sporting teams. Manchester United, the New York Yankees, the Dallas Cowboys. They never go into a game blind. Why? Because they have a game plan. I want you to have a game plan for how you're going to attack the market. So what we do every single night is we run a very long and expensive algorithm through our watch list of stocks, which we call our black book of stocks, and we'll reveal to you which are some of the methods that are great for some of the stocks that we have on our watch list. So today, for example, Apple, setup number 1, or GLD, setup number 9. Now, my members absolutely love this. A couple days ago, David sent me an email. He says, "You're killing it. I took 14 stocks out of the game plan. 4 are closed today with more than 50% profits, and 10 are still running at the green zone. Am I too greedy? I see money laying on the floor waiting to be picked up thanks to you." That was a couple days ago. Here is literally this morning. He says, following your morning game plan, I have normally 10 to 14 open positions, while almost every day 2 to 3 are closing as a winner with 50% profit targets. Today's winners, Abago, Chipotle, Disney. This is absolutely amazing. I don't want to show off, but really, this is very easy to do. David has a game plan every single day, and I want you to have that exact same one. So again, you're going to get those profit crushing setups so you can make a lot of money. You're going to get those automation tools to save you a ton of time. You're going to get those done-for-you tools and cheat sheets and that morning game plan so you know how to attack the market each and every day. You're also going to get live weekly trainings every single week, okay? I want to repeat that one more time. I said I wanted to do this with you together. So for that, we are going to be on live weekly trainings every single week. Not by me, not by someone else on my team, by me every single week. And if once a week is not good enough for you, in our private Facebook mastermind group, which is 24/7, as well as email. So literally this afternoon, if you have a question, you can literally hit me up in the Facebook group, or you can email me and I can give you a response and help you out with whatever's going on. And look, I told you at the beginning of this training, okay, this training would be worth at least $5,000 to your investments. And I know that we proved that beyond a shadow of a doubt that was dead true. But as you guys also know, I'm not going to charge you the $15,583 total value to get access to the weekly live trainings, to the automation tools, okay, to all that stuff, right, to the software, to the training. But I have a question for you. What if I did charge you $15,583? Would it be worth it? If all it did is make you very profitable by doing trades just 8 days a year, would it be worth it? Yeah, absolutely. You get to take off the other 357 days. How amazing is that? Absolutely, it would be worth it. If all it did was supplement your income by making a few extra $1,000 every month for the rest of your life in a semi-automated fashion, would it be worth it? Absolutely. Make a couple grand every month. You pay off that $15K in a couple months, and everything on top of that is gravy. So would it be worth it? Absolutely. Now, if all it did was by utilizing my daily reminders, allow you to never worry about your finances ever again, and allow you to spend more time with your family and travel, would it be worth it? Absolutely, folks. Who doesn't want that kind of lifestyle? Because you see, total value in Market Hero is $15,583. But everything in Market Hero is the exact step-by-step blueprint for how I was able to make over $1.4 million of profits in the stock market. Right? How many of you, if you could, would write me a check right now for $15,583 to learn the exact step-by-step formula for creating an account of this size, right? It really puts it into a little bit different perspective now, doesn't it? Because Market Hero is not a cost. It's an investment. You see, whether we like to admit it or not, the people around us who are the most successful are the ones who continuously invest in themselves. They invest in their mind, in their skill, and in their craft because they know the investments that they make in themselves are the ones that generate the greatest returns, okay? Don't just take it from me, okay? Take it from the wealthiest, most successful investor ever, Mr. Warren Buffett, because he agrees. He says the most important investment you can make is in yourself. So you can see why it's actually a steal at $15,583. But look, I told you at the beginning of this training that this is a $5,000 offer for everyone else walking down the street on my website right now. But I also said, because you're on this training with me right now, there's going to be a ton of goodies and a heavy, heavy discount. So folks, you can get started today for one lifetime investment of just $9.97. So go ahead, open up a new browser tab, head on over to stephenbrooks.co/VIP. And again, I want to make this super clear. This is not a subscription, folks. This is one lifetime investment, okay? This is not an auto rebill. This is not a subscription service. There are no other hidden fees or costs. We're not going to randomly charge a card for things in the fine print. This is a one-time investment, okay? Let me repeat that one more time. This is not a subscription. We will not charge your card a year later. This is a one-time investment, okay? Now, here's a handful of our members who have made that lifetime investment back just this week. Mark emailed me. He says, I can take my family to Disney this year from the $4,600 profits you made me from the Yum trade you sent out, Stephen, just this week. Leanne says, I paid for my membership today. David says, Stephen, I wanted to write to you to thank you for your oil trade alert. It was the quickest $4,000 I've ever made. Thank you a million times over, okay? Now, I kind of have this saying with my company, that if I can't make you money, then I don't deserve yours. So for that, we have a very generous 30-day money-back guarantee. And the first part goes like this. I ask you to learn and try 5 of our methods in the first 30 days. You can try them on paper money or you can try them on real money. It doesn't matter to me. And if they don't work out for you in the first 30 days, all you have to do is email my support team. And once they verify that information, we will go ahead and issue a full refund, no questions asked. And the second part goes like this. Once we verify those methods did not work out for you, not only will we give you a full refund, but we will also write you a check for $500 cash for wasting your time. And again, the reason I'm able to do something like this is because our members are very, very successful. So I want to make this as much of a no-brainer as humanly possible for you. So open up that new browser tab, head on over to stephenbrooks.co/VIP. So again, what you're going to get those profit-crushing setups designed to make you a lot of money, those automation tools designed to save you a ton of time and allow the system to work for you without you having to be in front of your monitor to click the button all day. You're also going to get my done-for-you tools and cheat sheets and my morning game plan so you know how to attack the market each and every day. You're also going to be part of my live weekly webinar trainings, again, live every freaking week, not with somebody on my team, but live with me. And also in our private Facebook mastermind group every single day. And again, the total value of Market Hero is $15,583. So you might be asking yourself, well, why should I join today? Or should I join today? Well, here's the deal, folks. When you invest today and today only, okay, today and today only, you will also get every single trade that I make for lifetime access, okay? So as you can see right here, in 2018, we did have some substantial results, a very, very high win rate, a very, very high ROI per trade. When I trade, you will know. This is a $10,000 value delivered directly to your phone and email for lifetime access. So you don't just get the playbook, you get every single play that I am running in real time. Okay, folks, this bonus alone is worth well of what your investment in Market Hero is today. You cannot get any more done for you. And actually, literally this morning, I got an email from one of my members by the name of Stephanie. She says, Mr. Brooks, which I prefer people call me Stephen, but okay. Before joining your program, there would have been no way I would have not lost money in the last 2 weeks. But following what you did, not only did I not lose any money, but I booked 11 winning trades by following your trade alerts. I literally cannot believe it. To see what you are doing in real time not only gives me a ton of confidence, but also gifted me a nice $2,895 in the last 2 weeks while the market was super volatile. I have already referred a handful of my friends to Market Hero due to my recent success. Now, I wanted to sweeten the deal for you even more. So when you invest today and today only, not only will you have access to the live trainings, right? To every single trade that I am doing, okay? To all my tools and cheat sheets, okay? But on top of that, you and I are going to get on the phone together in the next few weeks for a one-on-one consultation. Everyone else walking down the street has to pay me $997 for a one-on-one consult, but you can be yours today absolutely free when you invest in Market Hero. So again, we're going to get on the phone, not with someone on my team, not with another one of my members, with me. We're going to talk about where you are today, where you want to be in the future, and exactly how you can get there. So go ahead, folks. One lifetime investment for $997, fully backed by our two-part, incredibly generous money-back guarantee. Again, this is not a subscription, folks. This is not an automatic rebuild. This is a one-time investment, and then you're in. So open up that browser tab, head on over to stephenbrooks.co/VIP, and invest in yourself today. Now, if you live in the United States, we've also done you one even better potentially. If you go to stephenbrooks.co/VIP, there's going to be a blue button on that page that says, something with PayPal, pay with PayPal. When you click that button and you check out via PayPal credit, PayPal will give me your $997 investment today, and then you will enter into a payment plan with payments as low as $27 a month. So think about PayPal credit this way. Number one, if you live in the United States, you can start today, pay later. Now, unfortunately, PayPal credit is only for our domestic US-based customers, but you can still pay with PayPal or credit card if you're international. Now, there's a really good book by Robert Kiyosaki called Rich Dad, Poor Dad, and I don't know if any of you have read it. It's a very good book on personal finance. It's been a New York Times bestseller for years. And in the book, one of the things the author talks about is the phrase, I can't afford it, or it costs too much. Like, I know getting the money to buy this stock would net me a 50% return on my investment, but I just can't afford it. Okay, and Robert Kiyosaki, he asks a much better question. He asks, how can I afford it? He says, the statement, I can't afford it, it shuts down your thinking. But just by asking the right question, your mind opens up and it starts looking for answers. It becomes much more resourceful. It's definitely a mind shift set, right? Here's the deal. The successful people like you and I, we don't think about how much it costs. We think about ROI. We want to know how much it's going to make us. So think about it. If not you, then who? If not now, then when? I believe you can either make money or you can make excuses. If you want to make money, then get all the help you need. If you want to make excuses, then don't complain. Don't complain about why you are stuck. Don't complain because why you aren't getting the results that you want. Don't complain because you've hesitated long enough. Today is the day. You've hesitated and waited long enough, and today is the day you say, it is my time. I'm going to do it because my future is worth it, my family is worth it, and I am worth it. So folks, if you want to achieve true financial freedom or supplement your current income or take parts of the profits that we're getting of up to 10.37% per trade, and you want to do it all by following a proven, modular, step-by-step framework that will leave no guesswork, even if you're a complete beginner, then Market Hero is specifically for you. Now, we don't have 20 minutes here. We have about 5 minutes to go ahead and get through this Q&A. So if you have any questions, do me a favor, pop them into the chat. I'll try to get it through as many as I can, but I want to make something super clear. Yes, you get the profit crushing setups, the automation tools, backed by the most generous money back guarantee you've ever seen in your life, live trainings every week, private Facebook mastermind group. Okay. However, for today and today only, you will also get my trade alerts, which I call my profit screaming notifications. You will also get a one-on-one consultation, and rather than having to pay $5,000, it can be yours for just one lifetime investment of $997. Okay, so again, that is today and today only. And if for some reason you're having any difficulty whatsoever investing in Market Hero today, then go ahead, email me at support@stonybrookssecurities.com with your name and phone number, and I will give you a call after the training to make sure that we can work something out. So again, I'm going to go through about a 4-minute Q&A here, and then we're going to kick it off to the next folks. So let me just take a swig of water, and then we'll go ahead and answer some of these questions. First question comes from Janet. I have an IRA. Will this work for me? Yeah, totally. So again, we one of the things that I'm most proud of is probably that we have versions of every single one of our trades for every single type of account. So if you have a very small account, a very big account, if you have a margin account or a retirement account, right? I'm very proud of the fact that we have a version of every single one of our methods for every single type of account. So yes, absolutely, this would definitely work in an IRA, 100%. Question comes from Mary. Stephen, I have 10K. What should I invest in? Well, here's the deal, Mary. You're not going to like my answer, okay? If you're saying, Stephen, I have 10K. What should I invest in? And you don't know the answer, well, then my response is you need to invest in yourself. You need to get that education. You need to understand what you should be able to do with that money, right? And whether it's working with me or working with someone else, that'll be up to you. But either way, you need to invest in yourself to get that education, okay? Sorry if that's not exactly the question you were looking for. Next question comes from David. Stephen, that is the most generous money back guarantee I've ever seen. Why are you able to offer something like that? Well, here's the deal, David. Here are the numbers that actually support why I do that. By the end of month 1, 68% of our members have made their initial investment back. By the end of month 2, that number goes up to 77%. And by the end of month 3, we have only had 3 members ever who have not made their initial investment back. Okay, so one of the reasons I can give such a generous money back guarantee is because when you invest in Market Hero, I have a very good idea of just how successful you're going to be, right, when you engage. Very, very cool. Awesome. Next question comes from Jonathan. He says, Stephen, if I don't buy right now, can I get the course later? When and how? Well, here's the deal, Larry. Number one, Market Hero is not a course. Okay, it's not a course. You can't become a pro at anything by getting a course or reading a video, or watching a video or reading a book. You can't become a pro by that at all. The only way, in my opinion, you can become a pro is if you get that information, and then you're able to work with either someone or people who are either going through that journey with you or who are currently in the position which you would like to be down the road. So one of the reasons we have such a high success rate with Market Hero is because, yes, you get all the material. You get all the trades, when to get in, when to get out, what's the stop loss, right? You get all the cheat sheets, you get all that stuff. But also at the same time, you get a live training with me every week. You can email me anytime. You can ask questions in the Facebook group, and one of our hundreds and hundreds of members can help you out. Or you also get to see the trades that I am doing in real time. That's one of the reasons we have such a ridiculously high success rate, is because it's the best of both worlds. So to answer the first part of your question, it's not a course, it's a community. And the second thing I'll say is, yes, you can totally come on board to Market Hero outside of this training. However, if you want to come on board tomorrow, for example, you will not get my trade alerts. You will not get a one-on-one consultation, and you'll have to fork up $5,000 as opposed to just one investment of $997. So, absolutely good question. Let me just see. Let me rifle off a couple things. This comes from Jeremy. Stephen, I live in Canada. Will this work for me? Yes, we have members from 12 different countries: the United States, Canada, UK, Ireland, the Netherlands, Germany, Saudi Arabia, Australia, New Zealand, Israel, Singapore, and I think I'm missing one more. So we have members from all over the globe. And in fact, now 45% of our membership resides outside of the United States. So you would fit right in, absolutely. Question from David, I'm a police officer. Will this work for me? Yeah. So David, here's the deal. 85% of our members have day job. Right? We do have people who are full-time traders or they're retired, but 85% of our members have full-time day jobs, which is one of the reasons why having a one-on-one consult is very, very helpful. Being in the Facebook group, being able to ask questions every single day, every single week is so helpful, because you can say, hey, Stephen, I have a day job. I'm a teacher. I'm a fireman. I'm a whatever. Point me in a better direction, because I really don't have more than maybe 10 minutes a day to trade. Again, you get a lot of time with me, which is why it works out so well. Question from Jamie. Stephen, I just signed up for Market Hero. What can I expect? So you can expect to get instant access to all of our material. You can expect to do our 10.75% ROI trade today, literally. You'll be offered to be in the Facebook group. You'll probably get a couple emails from me and my team today. And then within the next couple of days, you and I will be on a live training together. So Jamie, we want to get you from zero to wherever you're going to be as quickly as we possibly can. All right, I'll answer one more question here, and then I'm going to kick it back to the moderators. Let's see. Stephen, can you give us that 30-day money-back guarantee again? Sure. I ask you to learn and try 5 of our methods in the first 30 days. Again, you can try them on paper money or you can try them on real money. It doesn't matter to me. And if they don't work out for you in the first 30 days, all you got to do is email my support team, let us know that information. And once they verify that information, not only will we give you your $997 investment back, we will also write you a personal check for $500 cash. And again, the reason we're doing that is because, number one, our members, when they come on board, they are super successful. And number one, I don't want you to come up with reasons why not to do this. I want you to come up with all the reasons why you should do this. So again, open up a new browser tab, head on over to stephenbrooks.co/VIP, and let's achieve your financial goals together. So thank you everyone for attending. Thank you to Top Gun Options, and I'm gonna kick it back to the moderators.
Thanks, Stephen. Appreciate it. Everybody give Stephen a virtual golf clap here, and thank him for his presentation. Good stuff, Steve. Always appreciate and enjoy working with you. All right, folks, next topic. I know a lot of my Top Gun Options members have been waiting for our next presenter, Kent Savage from Traders Accounting. This guy's great. Love Kent. I actually, every time I listen to him, learn something new each time. He's going to talk about something near and dear probably to everybody's heart in this room, how to avoid paying too much in taxes. He's also going to cover like trading through an LLC and all sorts of good stuff. So make sure you silence all your distractions there, and let's get airborne with Kent. Hang on one second. Let me throw him the control, and we will be good to go. Kent, it is all yours, my friend.
Hey, thank you very much, everybody. I'm excited to be here. Let me just switch my screen over here for you so you guys can actually see the right thing. Looks like the wrong thing popped up. Hold on one second. Now, as was mentioned, we're going to talk about taxes today. Taxes is everybody's favorite topic because it's so exciting and everybody loves to talk to a everybody loves to talk to a tax attorney. So
I can't see your screen yet.
Yeah, hold on one second.
Okay, roger that.
Second here. Let's make sure it pops up right. Here we go. Okay, can we see it now?
You got it, man. Perfect.
Awesome. Okay. Now, let me just give you a quick little background. My name is Kent Savage. I am a tax attorney. I work with Traders Accounting. Traders Accounting does accounting for people who trade. It's pretty straightforward, guys. So I want to talk about quite a few things today. But as we start, okay, I'm going to throw this disclaimer up here on the screen. I want you guys to take a look. I have to do this just because I am an attorney. Because I'm an attorney, we are going to I'm going to be saying a lot of things. Realize that the things that I say are general statements, okay? And just because you're listening to me doesn't mean that I am your attorney. If you want to talk, we're going to show you how to do consultations with us today. We're going to give a free consultation to anybody who wants to talk about their taxes and see if we can actually set you up to save a bunch of money. Now, throughout this presentation, I'm gonna ask you guys to come and talk with me or talk with Raven. This is going to be a free consultation, like I said, for 30 minutes to see if we can save you money. So there's going to be different ways to get a hold of us, and I will reference these throughout the webinar today. But I want you guys just to take a look at it real quick. You can find us at www.tradersaccounting.com. Okay, you can always call us at our phone number, 1-800-938-9513. That will be at the bottom of the screen all day. You can email us at learn@tradersaccounting.com, or most simply, just go onto your browser, type in tradersaccounting.com/TGO, and that will bring you to a form that you can fill out. Pick a time that works for you, and we will get on the phone with you, and we will go over all of the stuff that we're going to talk about today, but how it applies to you personally. Now, most of you guys trade. Well, I'm assuming everybody trades, right, so that they can make money. That's the biggest thing. And there's a lot of people out there that have great ideas, really help you out to find how to make money. But regardless of what you do to make money when you trade, what type of strategies you're looking at, or how the markets are evolving, one thing that is always constant when it comes to money is taxes. And as you know, taxes might go up and down depending on who's in office, but no matter what happens is we always have the taxes, okay? So whether you're making money, you have an up year, or you have, unfortunately, a down year, whatever happens, you always have to pay taxes. okay? And one of the things that people don't realize is with some simple steps, some pretty inexpensive and simple steps, you can save a ton of money on your taxes year after year after year. Now, I'm going to start with some basics, and some of you guys might know these things. But again, for more clarification, come and talk to us. Okay, give me or Raven a call, and we'll talk to you about this. One of the best ways for us, and one of the biggest groups of people that we can actually save a ton of money on your taxes, is if we get you classified as an active trader. Okay, an active trader is somebody who trades technically inside of a business. Okay, so if you have a business and you're trading, you are an active trader. Now, you have to qualify to be an active trader, and we're going to talk about how you do that. When you qualify to set up a business, then we can trade as an active trader. If you don't have anything set up like a business, then technically, when you turn in and do your taxes at the end of the year, the IRS looks at you as an investor. So even if you're trading every day, they're going to look at you as someone who's just doing this kind of on the side and as a hobby, or a long-term investor. Okay, and then they're going to treat you tax-wise that same way. Investors do not receive good tax treatment. Okay, so a lot of people, probably most people that are hearing me right now, when you're trading, you're being considered to be an investor. Now, many people can qualify to be trading in a business, like I said, and not be trading as an investor. And if you can qualify to be in a business, we're going to save you a ton in taxes. Now, here's why. A lot of people are out there, and you might have had an accountant or someone that says, hey, you don't need to trade inside of a business. It's not going to be beneficial to you. Okay, well, here's where this goes off a little bit. If you do not trade inside of a business, but you're trading consistently, one of the biggest problems with deductions is there's deductions out there, and if your accountant knows the tax code, they're going to try to get you some deductions. But one of the deductions, one of the issues with deductions is if you are trading without a business, a lot of times, especially under the new tax law, they consider you to be doing a hobby and not to be doing a business. Now, this is actually really interesting because over the years since the tax code was first put in its current version, the current overall version, which was back in the 1980s, the IRS has fought and changed to make people who they don't deem serious business people, they try to make them classified as quote unquote having a hobby. Okay, so even if you're spending all this time and money and you've invested in yourself, you've learned, you've been taking these courses, you do all of that, and then you try to take deductions. Well, if you don't have it set up correctly, the IRS is going to say, you know what, we think you're just doing this as a hobby on the side because you're not really doing it for profit. And if they can classify you as a hobby, then they can take away the deductions that you can generally take. Now, the way to do that is to get you classified as a business instead of being classified as a hobby. Now, there's a few things that courts have specifically stated will make you classified as a business instead of a hobby. Okay, and this isn't a hard and set fast rule, but here's a few things, and I'm going to go over them. If you have questions or you want to know if you specifically fall into any of these categories, then give us a call and we'll go over and we'll look at it with you. Because like I said, these are very general rules. They actually don't come straight out of the tax code. They come from court cases, and the court cases are very complex. So instead of just looking at this and saying, hey, I do or I don't qualify, just give us a call and we'll talk about it. We'll see if you do. Okay, but the general rules of thumb are, if you complete during the year 200 to 300 round trip trades, okay, you have 500 hours of your year dedicated to active trading. Just so you know, 500 hours is about 10 hours a week. Okay, 50 weeks a year, 10 hours a week. That's what 500 hours is. If you trade for 170 to 180 days a year, okay, if you fall in one of these categories, it's very likely that you qualify to be setting up a business and saving yourself a lot of money in taxes. Like I said, if you're close to this or you have some special circumstances, call us up and we'll see if we can get you classified. Okay. Now, like I said, give us a call at that 800-938-9513 number, okay, to see if this is right for you, or go to tradersaccounting.com/TGO, okay, and we'll get you signed up and we'll get you on the phone and we'll have a conversation. Now, the only way to totally avoid the hobby rules and to get classified as a hobby is to create a business, okay? So most people out there, when they're trading as an individual. And what that means, guys, is that you have a trading account, and the trading account is in your own name, okay? So if you guys are trading and you have a trading account that's in your name or the name of your spouse or whatever, if it's an individual name on there, it's most likely that you're trading as an individual. And if you try to take deductions, you can be classified as a hobby, okay? If we set up a business, we can generally avoid those hobby rules. Now, the other thing that we can do when we have that business without being worried about the hobby rules is it allows us to deduct all of our expenses. Okay, so anything that you do, any of the courses that you purchase, any of the trainings that you go to, anywhere you go to seminars, all of that you can deduct if you have a business, okay? And if you sign up with us, we'll talk about different ways to get you to actually not only do the obvious things, but there's a lot of things that aren't as obvious that we'll be able to help you take as deductions as well, okay? Now, one of the cool things about having a business is, let's say you make a little bit of money, but we're able to deduct more than you've made, then you'll have a loss for the year, even though technically through your trades you've made money. And that's really cool because that makes it so you end up actually not even paying taxes. Okay, and some of our clients end up in that situation, which is really cool. Now, there's a few other great reasons to be trading out of an entity. You'll see entity throughout this presentation. What that means is just a company or a business. Okay, company, business, entity, it's all the same thing. So we like to set up entities, okay? Number one, no IRS reclassification issues. That's actually mentioning the hobby thing. So everything we talked about, that hobby, you don't have that issue. The other thing is a lower IRS audit rate, okay? So I don't know if any of you guys have ever been audited, not very fun, okay? But if you set up a business, it actually turns out that we can go a lot more aggressive on deductions when you set up that business, and the actual rate of getting audited drops substantially, okay? And that's because when the IRS is looking at things to audit, they don't necessarily look at companies the same way that they look at individuals. So when you take deductions as an individual, they will go over that and find where they don't like your deductions, and then they audit you. The number one group of people in the United States for the last many, many years that have been audited are people who do well and do activities on the side, but not in a business, okay? So if you make $50,000 or more a year, and then you're doing something like trading on the side or running some other business, and you take deductions, okay, that's the number one group of people that gets audited. Now, if we set up a business, we get around a lot of that. Also, because businesses are passed through entities generally, and we'll talk about that in a second, when we have a loss for your business, or you purchase something for your business, or you do something for your business, in the end, that's actually going to lower your personal taxes, okay? The final reason is when we create a company, you get some asset protection. And I'm not going to spend a ton of time on asset protection today because it's kind of a different topic, but I will say this, there's a lot of value if you ever get sued, if somebody's coming after your family or you from a different job, having a company set up can really save you and your family. Now, if you do get audited, okay, there is nothing in the tax code that says you have to keep records of your deductions, okay? So, you know, people, you've probably heard things like you can deduct mileage, or you can deduct meals, or different things like that when you have a business. All that's true, okay? And you've probably heard people say you have to keep receipts and all of that. Well, the code doesn't require that you do that, okay? However, the IRS does. And when there's something called legislative grace, meaning that deductions are given as a legislative grace and they don't have to give them to you. In other words, Congress and the government does not have to give you the deductions. So that's why we keep records. And so another thing we're going to talk about is how to keep the proper records so that you don't get in trouble when you take the deductions. That's something that we're going to go over if you give us a call. Now, I want to go over some of the things that we can deduct. Some of these things you might have heard about, and some of these things you probably haven't. There's a lot of wording in these slides, so focus on what I'm saying. For those of you who really like to get into this stuff because you're kind of nerdy like me, go ahead and read if you want, okay? But I'm going to try to throw out some of these things that are pretty cool that you might not have heard of, okay? This is actually two of the things that you can deduct are startup costs and organizational costs, okay? So we look at the 12 to 15 months before you set up a company, and any money that you've spent on courses and anything else for the last 12 to 15 months, we generally can take those things into consideration as deductions when setting up a company. Now there's limits to how much we can take, but if it exceeds those limits, we can actually put it into your company as a depreciating asset, meaning we get to take the deduction over a long period of time, okay? But we still get to take the deduction. The other thing is just this organizational costs, which these are actually a little bit different. So startup is the stuff from before you actually set up the company. Organizational costs are the costs of actually creating the company. Okay, those are all things that we can deduct. Some of the other expenses that you can deduct if you have an LLC or a corporation, if you purchase equipment, okay, so that basically that's anything electronic. Goes a little bit beyond that, but basically anything electronic. Okay, your automobile expenses, meaning your mileage, which by the way, guys, we'll show you how to take mileage. A lot of people say, well, why would I be taking mileage? I'm just sitting in my house and I'm trading. Well, we'll show you when you can, when it's appropriate to take, and it's actually a lot more than you think. It's really cool too because the current mileage deduction is 54.5 cents a mile. So to put that into perspective, if you drive 10 miles, that's a $5.45 deduction from your taxes just from driving that 10 miles. So a lot of people will do that. Like if we have a business meal, you have a meeting, you'll go to that meeting and drive back, and just from the driving, you're deducting 5.45 bucks from your taxes if it was just 5 miles to a restaurant and back. And the cool thing about that, guys, is that 5.45 cents, that's the 5.45 bucks that you're deducting, that's more than you're paying in gas. So it's pretty cool. We can do some really cool stuff with that. If you make contributions to retirement plans, we can actually set up retirement plans that go along with your company, so you can have your own 401k that's tied to this company. Okay, life insurance, travel, meals, we'll talk about that. If you travel internationally, if you travel in the US a lot, we can do certain things to make sure that when you're traveling, we take time to make sure your business is a priority when you travel so that we can deduct your travel, okay? Same with your meals. Some really cool stuff. For those of you who are in certain medical situations where you have a lot of medical bills, one of the things that we can do through C corporations, if we set that up, is we can do what's called a medical reimbursement plan. A medical reimbursement plan is basically it's a way that we can have your company pay you back for all of the money that you spend for your medical issues, and then they get to take that as a deduction from your taxes, okay, from the taxes of the corporation. So it's really cool because we can actually deduct the money that you're spending on your medical bills. Now, as some of you know, taxes have generally included medical. With the new standard deductions and everything else that comes out, you have to have a certain percentage of your income that is medical. You have to have medical expenses that are over a certain percentage of your income, and then you can start to deduct it. With a medical reimbursement plan, it doesn't matter where you are with your income or what percentage that is, we can make those deductions, which is really cool. Okay. Now, if you guys are interested, again, I want you guys to call and do this consultation. It's free. It's low pressure. It's not some, we're not gonna get you on the phone and push you. What we want to do is just see if we can help you out. Okay. If you want to see what kind of things you can deduct because you're a little shy and you're scared of talking to us on the phone, go ahead and just email learn@tradersaccounting.com. Okay. Again, that's learn@tradersaccounting.com. And if you do that, put expense sheet in the window and I'll give you a list of expenses, okay, and things that you can deduct, and you can look at it and see if it's applicable to you. Again, if you call us, we'll walk through that kind of thing with you. We can ask you, hey, what kind of things have you spent money on? And we can kind of show you where we can take deductions, things like that. Now, a lot of people have a lot of different ideas on what type of business they should set up and also where they should set it up. So I'm going to talk about where to set it up in a little bit. Okay, but one of the things is they like to talk about what type of business, and there's a lot of people out there that give a lot of different types of advice. Over here at Traders Accounting, we take the tax considerations when it comes to forming a business, and we also take the actual business considerations, okay, because there's more considerations than just the tax, but the main ones for people to focus on are the tax. And a lot of people who are telling you to set stuff up don't know that much about tax, especially tax of traders. Okay, so there's different types of businesses though. The main ones that you're going to find are sole proprietorships. So you hear people say, hey, I have a sole prop, or I'm a sole proprietor. What that means is you don't have a business. Okay, this is what a lot of people try to do, or accountants tell their clients to do when they're doing a lot of trading and they want to take deductions. They'll say, hey, just be a sole proprietor. Okay, now the cool thing about that is it doesn't cost you anything to set up, and it doesn't cost you anything to deduct. So all you do is you take your business deductions and you don't have to do anything special to set it up. You don't have to file with the state, anything like that. However, the problem with that is you often get classified as a hobby when you're a sole proprietor. Okay, so that's when the hobby rules come into effect. So the IRS will come and say, hey, you know what? I think you're doing this as a hobby. Okay. The other issue is the audits, like I already mentioned. When people set up a company, but it's not a real, well, it's a real company, but they don't actually set it up with the state, then they get audited quite a bit. Okay, that's the number one group, like I said, of people who get audited. And then there's no asset protection that comes from having the entity set up. Okay, now, however, we can get you to set up an LLC, okay, which is actually taxed as a partnership, which again, we can talk to you specifically about what that means. LLCs can also be set up and taxed as C corporations or S corporations, okay? The cool thing about setting up an LLC is when you set it up, we can deduct the expense of setting it up. You also have asset protection that comes from setting it up. Another pro that's not listed here is number of audits drops like crazy, okay? As long as we can get it classified as a partnership or some type of corporation, okay, audits drop like crazy, okay? One of the issues that some people run into is technically for us to get those tax advantages, generally we need 2 or more people to be in that company, okay? C corporation, if this works for a lot of people, it's not for everybody, okay? But C corporations, we still get to deduct your expenses. We can have medical reimbursements. You can have a lower tax rate if you have a higher tax rate than 21%. So if you're in a 24%, 32%, or something higher than that percentage tax bracket, a C corporation is definitely something to look at. Sometimes we'll do it for people that have a lower tax bracket, but there's specific situations when we do it, especially if they need medical reimbursement or things like that. The cons with that, well, there's double taxation in a C corporation. So if you want to take the money out, it's generally not a good idea. What we like to do is if you're going to set up a C corporation, we generally like to have it kept in there for a long period of time because then it makes sense when it comes to the tax rates. Now, for some people out there, especially people that need medical, that have a lot of medical expenses, sometimes a C corporation can work really well, and we pair it up alongside of an LLC. So you're trading out of the LLC and the C corporation does some management, but we can use that to give you money back for the medical expenses that you're using. and start to deduct those. So that's an advantage sometimes with people who don't have a super high tax rate. That's what we're going to do for it. Okay. Now, S corporations, some of you out there, if you have another type of business, I know there's a lot of people that get into trading who are also into other types of businesses like drop shipping, other things like that. Or even if you're just, you're a doctor, a lawyer, or someone else like that, you might have an S corporation. In some instances, we can use your currently existing S corporation to also be trading out of. It's a there's very specific good reasons to use S corporations, generally not in trading though. Trading is different, it doesn't fall on, it has some exceptions in the tax code that make S corporations not the best thing for trading. However, if you have another company, give us a call and we can tell you if we can put it in the same company with your trading. But generally we don't use S corporations for trading. Again, if you guys have questions on that, I'll be happy to answer them later, but also feel free to give us a call. Okay. Now, call for the free consultation. We can talk about whether we should set you up with an LLC, if we should have it classified as a partnership, or if we should get you in a C Corp. Again, we can save almost everybody money. So give us a call and just see what we can do specifically for you. Okay. Again, go online if it's easier than calling for you. www.tradersaccounting.com/TGO and talk to me or talk to Raven. All right. Now, I have a lot of people ask me quite a bit. They ask me about where they should set up a company. Okay. This is one of those things that unfortunately you're going to get a lot of different answers from a lot of different people. Okay. Generally, everybody that you listen to out there, if you go online, they have some good points, but they're usually wrong or they're applying the law incorrectly. So there's a lot of people that say, hey, what about Nevada? What about Wyoming? What about Delaware, New Mexico? There's other states out there, Arizona, Alaska is a big one that I see where people want to set stuff up. If you don't live in those states, guys, generally they're not the right thing for you. Okay. The rule of thumb answer is we set up companies in the state where you live. And the reason for that is because the company where you live, or the state, excuse me, where you live requires that you set up the company where you live. And if you set it up somewhere else, they require under state law that you bring that company and also register it in the state where you live. So let's say you set up a Nevada company and you spend a bunch of money with a company to set up in Nevada, and they say, hey, this is great, you don't have to pay taxes, all this other stuff. But if you live in a different state, that other state's going to say, hey, I beg to differ. So not only are you in Nevada, but you also need to come and register your company here in our state. And when you register it, you need to still file a tax return in this state. And so then now every year you're just paying registration fees in Nevada and also in the current state that you're living. Okay, same with Wyoming, same with Delaware, same with New Mexico. Now there's certain people out there that live in certain states where this isn't the case. Okay, usually when people say, hey, let's do Nevada, Wyoming, Delaware, something like that, usually what they're doing is they are trying to get you to take advantage of the laws of those states, and that can work, especially if it's a holding company set up for certain circumstances, okay? But generally people that are telling you that don't understand that, and they don't understand that the tax laws of your state are still going to apply to your state. And there's a lot of asset protection reasons to do that, but again, it's not business reasons. And the laws of your state are generally going to override any of the states that you want to be set up in. Again, Nevada, Wyoming, Delaware, New Mexico, Alaska, North Carolina. There's a lot of states out there that people will champion. Be really careful about that, guys. But again, give us a call and we can specifically talk to you about what we think you should do, because you might be in one of those states that we can set up something like this. Now, one of the other things that you can do when we set up a business, and one of the things that we'll look at with you if you want to give us a call, and one of the biggest things that people don't realize that can be a killer for them with their taxes is wash sale rules. Okay. Now this is gonna be one of those times where I'm gonna go full nerd lawyer on you, and I'm actually gonna read from the tax code, okay? This is gonna take me like 30 seconds. So if you guys are going to tune out, tune out for a few seconds here while I read this. But for those of you, it's really important that you hear this. So just follow with me, and then I'll put it into what it actually means, okay? Disallowance of loss deduction in the case of any loss claimed to have been sustained from any sale or other disposition of shares of stock or securities where it appears that within a period beginning 30 days before the date of such sale or disposition and ending 30 days after such date, the taxpayer has acquired by purchase or by an exchange on which the entire amount of gain or loss is recognized by law, or has entered into a contract or option to so acquire, hang in there guys, we'll get there, substantially identical stock or securities, then no deduction shall be allowed under section 165 unless the taxpayer is a dealer in stock or securities and the loss is sustained in a transaction made in the ordinary course of such business. For purposes of this section, the term stock or securities shall, except as provided in regulations, include contracts or options to acquire or sell stocks or securities, okay? Super fun. What this is actually saying, okay, and for those geeks out there, I hope you had a really fun time reading that with me because I know I did. But what this is saying is basically if you sell a stock and then you buy it again in less than 30 days, then the IRS is going to pretend like you never sold it in the first place, okay? Or if you buy a position that's substantially the same. If you do that, they're going to just pretend like it never happened. Now, the reason why they do this is a little complex, but the basic reasoning on this is, hey, let's say it's December 31st, and you're going to have a loss on your taxes. Or if you sell, you're going to have a loss. Then you can go ahead and sell. And then the next day, on January 1st, because that was the end of the tax year, now you're done, you can go ahead and purchase that because now you think you're going to have a gain, okay? And the IRS hates that, okay? So if they decide to get down and dirty in the taxes and they see that, then they're going to not let you do that, okay? That's called a wash sell. And again, there's deeper reasons that people do that and care about that, if that doesn't quite make sense right off the top. But again, we can call and talk about it with you. Now, one of the things that you can do is, and we can discuss with you, is taking the mark-to-market election, okay? And this is a very in-depth thing to do with your taxes, and I am going to cover it in another webinar, not today, but I am going to make mention of it today, just to make sure that we can cover it and you have an idea of what we're talking about, okay? Mark-to-market, what it does is it gets rid of wash sales. Okay, so what I just told you, if you buy a security, you sell it, and then you buy it again within 30 days, and they pretend like you never sold it in the first place, it gets rid of that. It gets rid of that rule, okay? Now, I know I'm kind of getting in the weeds here, and I want you guys to realize that's why we have tax guys like me, is because we're geeks and we like to get in the weeds. I'm going to tell you some of the other things that it does. So give me, hang with me here, because this is something, again, that we can do to help you out. And I want you guys to realize that a normal accountant and a normal person who goes over this kind of stuff doesn't understand these things. A lot of the people that will present to you don't know the tax side of this. So I want to show you how it can benefit you, okay? One of the things that it does, and again, for you really nerdy people, you might get this right off the top. And again, nothing wrong with being a nerd, that's who I am, okay? Is when you make money from like a normal job, that's considered ordinary income. Okay, so if you have money, you go out and you work, you make $50,000 a year, that's ordinary income. Okay, if you are trading and you make money from trading, okay, that is generally considered, with a few exceptions, but that is generally considered to be capital income or capital gain when you make money, capital loss when you lose money. The IRS treats ordinary income and capital income differently. So if you're trading, they actually treat your trading differently than when you make income. So let's say, for example, let's say you make $30,000 a year, okay? You make $30,000 a year working, and then you turn around and you lose from your trading in a year, let's say you lose 10 grand from your trading. Well, a normal person might say, hey, look, I made 30 grand, but then I lost 10 grand. So altogether, I should make 20 grand and I should pay taxes on 20 grand. Well, the IRS says, hold on a minute. We don't think so. What you should be doing is you'll pay full taxes on that 30 grand that you made, okay? And then you can carry those losses over to another year, or it will classify you as a hobby and you don't get to take those losses at all, okay? So that's what the IRS does, is they say, well, you still have to pay money on that 30,000. Now there's a couple little things, they offset like 3,000 from losses, other things like that. All you guys that know that and you're screaming, hey, what about the 3,000 carryover? Yeah, that's there. But the general idea is they will tax you fully on that income. If you take the mark-to-market election, okay, and if you qualify for it, then we can combine it. Then we can say, hey, you made 30,000, you lost 10. We're actually going to slide it together so that you only made 20, and then you only have to pay taxes on 20 instead of 30. Okay. Now again, I know I'm getting into the weeds on that, so I'm going to jump back out and get back on the road. But I want you guys, if you have questions about that, if you're interested in that, again, that can do a ton for people in their taxes. That can save thousands and thousands year after year, even in years where things are down and you have a loss, which I know nobody wants. Okay, but even when that does happen, we can save you thousands of dollars on your taxes, okay, which makes having losses a lot easier to swallow when it actually is helping you with your taxes. So feel free to give us a call and we can go over those things. Now, there are lots of accountants out there. And this, I'm an attorney, I'm a tax attorney. I work with traders because I really like them. There are a lot of other accountants out there that I know and that I've worked with, okay? I spend my time doing investment advising for people, tax advising for all different types of companies, all different types of traders, people that do all these different things. I have seen accountants in all different areas because what I do is focus mostly on investments. There are very special rules, okay, that have to do with trading with accounting. The biggest one of those is section 1402 of the tax code, which basically says if you are a trader and you're an active trader and you have a business and you make money, you are not subject to 1402 payroll taxes, okay? You are not subject to pay the payroll taxes. And a lot of people do not know that. A lot of accountants do not know that. So they will have their traders, they'll say, hey, yeah, let's set up a company and we'll save you money with deductions. But then they have you pay payroll taxes. And that, for most people, that just comes out in their normal taxes at the end of the year when they file their tax return. There's a few ways it comes out in other ways, but that's what generally happens is they file at the end of the year and they add that to their tax return and they don't even know it. Your accountant doesn't come out and say, hey, by the way, I had you pay payroll taxes on this. But I've seen a ton of accountants that do that. And accountants do it every year, and we refile hundreds of returns every year because this happens. People come and they say, hey, will you double check my taxes? We say, sure, and we look at it and we see that they've had to pay payroll taxes. The other thing is, depending on what you're trading and what contracts you're trading, there are different types of tax that go along with those. Again, or if we take the mark-to-market election, all those things. A lot of accountants don't know those things, so it's really important that you do that, and we can save, like I said, a ton of money if we set that up right. Okay. Now, I want to go and answer some questions, and I have a little bit of time here, so I'm going to give plenty of time for people to ask questions if they'd like. Just remember a few things here. Give us a call or check us out at thetradersaccounting.com/TGO. Okay. Go to that, guys. Let me know if you have questions when you go and you sign up. Again, you'll talk to me or you'll talk to Raven. Raven does a great job. She's amazing when you talk to her. Again, give us a call. We'll have a free 30-minute consult. We'll be really happy to go over whether or not we can save you money. And like I said, if this isn't a pressure thing, this is a, hey, call and let's see if we can save you the money. And if we can't, then we're not going to try to sell you on it. But if we can, which almost everybody we can, then we would love to give a talk, have a talk with you. Okay. So let me jump over to some questions, and let's see. if I can answer some of these things for you. So let me just pull them up. All right. Somebody asked in reference to mark-to-market trading. They said what about mark-to-market when it comes to Forex or futures? There are specific rules. Again, this is kind of in the weeds. There are specific rules for 1256 contracts that the mark-to-market doesn't apply to. There's other things that can apply. Okay, so again, call us. Go to thetradersaccounting.com and set up a time to talk to us, and we'll tell you how it applies in your situation. Again, it's a different, there's specific rules for those things. So, you know, say, hey, this is what I'm trading, this is how I'm doing my options, whatever, and we can go over that and see how that all applies to you. Okay. The next question I have, if I live in a tax-free state, can I use a different state's business? That's a very good question. So for some of you guys that live in states like Florida or other states that don't require the filing of tax returns, local tax returns in those states, sometimes we can use a different state. Sometimes you can be the type of person who gets to use a Nevada or a Delaware type entity. Sometimes it's worth it and sometimes it's not. Depending on the state you live in. Like for example, people really focus on Nevada, they really focus on Delaware. Some people don't know that Arizona is actually one of the better states to file in. They're better and they're cheaper than all those. And you don't have to do annual filings or pay annual fees there. Again, so there's a lot of misinformation because people want to make money and they're not necessarily wrong, and the information that they give you isn't wrong, but it's not complete. Okay, so they'll say, hey, this is no tax state. Well, it is, but it doesn't mean that you don't have to pay taxes where you are. So if you live in a tax-free state, realize that that might not be the truth for the business you run. The business might have to pay some taxes there. Again, we go over that when you call us and we talk to you to see if it's worth setting up a business. But we can go over that with you. Okay. Somebody said my accountant told me that I don't need a company. Okay. Well, your accountant might be right. He might absolutely be right. He might also be wrong. Okay, so like I said, a company, and there's another question here that mentions, hey, I don't make that much. I'm just starting out. Should I have a company? Generally, the answer is yes. Okay, if you are trading, like I said, if you're doing 200 to 300 round trip trades a year, okay, spending 500 hours or more, or like I said, that's about 10 hours a week working on your trading. If you are trading about 170, 180 days a year, if you fall into any of those buckets, or you're planning on that, then yeah, let's set you up with a company, or at least call us and talk to us about setting up a company. Like I said, if we don't think you're a good fit to set up a company, we'll tell you, okay? Because we don't want you to spend money on it and then it not work for you. So call us, sign up with thetradersaccounting.com/TGO, and we'll get you set up for that free 30-minute consultation. And you can see we covered a lot of stuff in 30 minutes today, guys, so we can go over quite a bit with you if you give us a call. All right. Again, going back to I'm a small trader, will this work for me? Yes, like I said, even if you have years where there's losses, okay, so no matter how big you are, let's say you have some losses for the year, hey, sometimes if, you know, come and talk to us, because we'll have deductions that you can take, whether or not you have a loss for the year. If you're in a situation where we can take the mark to market and you have a big loss and you have a job that you're making money out every day, or you have a spouse that has a job while you're trading at home, yeah, we can actually do a lot to offset your normal taxes with the loss that you have. So you're paying taxes anyway. Like I said, the IRS likes to tax you on the money that you do make, regardless of whether or not you lose money doing something else, okay? So because of those different tax classifications, call us and maybe we can combine them. Or if you're just going small, another thing, let's say you only make a little bit of money every year. Well, if we can take the right deductions, even if you're making money, if we can take enough deductions, then you're going to be negative. So even though you're making money, you're going to be reporting a loss, which is awesome. because that can also go against your income. So you'll be making money, you'll be living a life like you're making money, you'll be growing your portfolio, but you can also turn around and say, hey, IRS, I'm taking a loss. And the cool thing about that is totally legal. We're totally doing it right, okay? And you can feel happy about saving a bunch of money on your taxes, okay? So yeah, just give us a call. No matter how big you are, like I said, it's a free consultation. Just talk to us. Somebody asked, I'm living outside of the US, does this work? The short answer to that is yes. The long answer to that is, are you a US citizen and are you paying US taxes? Because what I'm talking about here is mostly US taxes. Now, if you're a US citizen living anywhere else in the world, okay, you are paying US taxes, or at least you are filing taxes with the US. And there are some exceptions that you get to take for living, exemptions, I should say, that you get to take for living foreign, or if you're getting paid from a foreign entity, different things like that. It's a different world, it's a little complex, but if you are dealing with US taxes in some way, shape, or form, then yes, this can work for you. If you are not a US citizen, you are not dealing with taxes in the US, then no. This doesn't mean that setting up an entity won't be good for where you are in the world. There are lots of different places in the world that have similar type tax structures, similar type entities. We do not file in other countries, okay? However, if you live in a country, like let's just say you live somewhere like Germany that has a tax treaty with the US and you are a US citizen, okay? Generally you have to report your taxes and you get a credit for all the money that you paid to Germany for your taxes, or vice versa, depending on how you're making your money, and a few different things. So in some instances, we can actually help you quite a bit, okay? But again, it just really depends. If you're not a US citizen and you're not in the US tax structure, no, we can't help you. But if you do have a question about it, or you are a US citizen, you're a service member somewhere in some other part of the world, yeah, talk to us, because we can do a lot of stuff. Sometimes, and in some instances, that could even include setting up foreign entities. Again, but that's going back to the US tax structure, so it's a foreign entity that helps you on the US tax side. That's getting way in the weeds. That's very advanced. So if you have questions about that kind of thing, do call us, because we can figure some of that out. Now, somebody asked to clarify, if I could one more time, the difference between the different types of buckets. Like I said, so if we, I guess what we mean here is capital income versus ordinary income. Okay, so generally when you trade, you make, and all the money that you make, especially if you haven't set up a company or done any type of election, all the money that you make is considered to be capital. Now so you've heard of capital gains. I know everybody's probably heard of capital gains and capital losses. Okay, that's capital income, and there's gains and there's losses. And there's long-term capital income and there's short-term capital income. And those things are taxed differently. Long-term capital gains are taxed differently than short-term capital gains. Different types of trades will give you different types of treatments when it comes to capital gains, okay? One of the interesting things that a lot of people don't know is short-term capital gains are taxed at the exact same rate as ordinary income, okay? So if you have money that you make just from your normal job, and then you make money from trading, it depends on what you trade and how you're trading it, and how you're doing the contracts, you know, how you're doing the options, but basically that the normal person is going to be getting, let's say you make, again, $30,000 at your job and you make $10,000. Well, the IRS, like I said, they like to tax things separately. Well, they like to tax them separately when it benefits them. Okay, so that's usually when you have a loss from your trading. Well, they'll say, well, we're still going to tax you on all the money that you make. But if you make more, they don't say, hey, we're going to tax you, you know, at your marginal tax rate for the 30,000 and then your marginal tax rate for the 10,000. They add it together so that you're in a higher tax rate. Okay, so they'll say, even though one's capital and even though one's ordinary, we're going to add it together and we're going to tax you on 40 grand of income. Okay, it's a little, that's a simplified version of it, but that's the net effect of what happens is you're paying you're paying taxes on 40%. I mean, $40,000. Okay. Again, call us and talk to us about that. I know that I'm kind of getting in the weeds there. And again, we can get in the weeds all day long, but let's do it in our consultation. So again, hit us up at www.tradersaccounting.com/TGO. Okay. Somebody said, I've heard if I have multiple years of losses, I can't have a business. The short answer to that is that's not true. Okay, this is one of the things that I've heard a lot from different accountants. Okay, and generally that is not true whatsoever. If you set up a business and it's set up correctly and you're using it the right way, you can have multiple years of losses and you can still take deductions, and we can still lower your taxes day after day after day. Okay. Or year after year after year, excuse me, but we can take your deductions day after day after day. And so that, again, that's a misconception. It's a misnomer that a lot of accountants will throw out there. Part of that is because a lot of accountants will put you inside of a sole proprietorship. They'll say, hey, you don't need to start a company. And that actually can happen when you don't start a company. If you don't start a company, this is going back to the hobby rules that we talked about. If you're just trading on the side and you just have your trading in your own name, you start to have enough losses, then the IRS says, hey, you're not taking this seriously, and we're going to go ahead and say that you can't take the deductions that you are legally entitled to under the tax code. Okay. Somebody asked, how do I know if my accountant is good? Well, that's a great question. There are a lot of great accountants out there. Okay. But you really want someone, if you're trading, or you're honestly, if you're doing any type of doing anything on the side, you really want to go to someone who specializes in trading. Or that type of investment that you're doing on the side or has experience with it, because you'll see places like we do a lot of tax returns. There's people that take their taxes to H&R Block. They'll use a software. You have to know how to answer the questions right. You have to know how to classify things, and that comes from your knowledge. It doesn't come from the software. So again, we can save thousands of dollars more than people generally save when you go to the right style of accountant. And I know that kind of sounds a little weird, but it's true. Okay. Let me see what else we've got here. Somebody asks, what if I play it safe and don't take deductions? So this is actually something that is interesting to me. I am an attorney. I've studied taxes. I've done taxes for a really long time. A lot of accountants and a lot of people have heard, let's just play it safe. Let's not take deductions, or let's not take something like a home office deduction, or let's not take a certain style of deduction because we want to play it safe. Guys, the IRS thinks you're weird if you don't take deductions. Okay. When they pass what the current iteration of the tax code is, again, the current, we change it. Every president, every Congress changes the tax code. Okay. But how the base tax code as we have it, that was passed in the 80s under Reagan. Okay. When it was passed and certain deductions were put in there, and people call them loopholes. They're not loopholes, they're deductions, and most of them were given to businesses. Okay. And the reason why they did that was they said, hey, just like today, 90% of businesses are small businesses. They're not big, they're not Apple, they're not, Facebook, they're not these huge corporations, they're small businesses. And we want small businesses to be able to take advantage of the tax code and stay in business because they're the backbone of the economy. So because of that, we are going to give them deductions. So you are expected to take deductions. So if you have an accountant who's telling you not to take deductions, or if you've seen that advice on the internet, or to be careful, well, yeah, you have to be careful. You have to do it legally, right? And I am not in any way, shape, or form advocating to not do this legally, but you have to be able to take the deductions. They're there. And so if someone's telling you that, no, we don't take deductions, or we don't want to be too aggressive, generally they don't know what they're talking about. Okay. Deductions were made to be taken, and that is why they're there. And like I said, the IRS thinks you're weird if you don't take deductions. They're happy with it. They're thrilled if you don't want to take deductions. But you do need to do it correctly, and we do need to document it the right way, okay, just in case there is an audit. But in general, we take the deduction and you save a lot of money. And like I said, a lot of money is generally thousands of dollars on your taxes when we do the deductions. And like I said, there are things that a lot of people don't realize they can take as deductions that they can use year after year after year, and day after day after day, things that they do every day that they can take as deductions. And to tell you just a quick little anecdote, just to show you how this is just kind of the case, how deductions really are a thing. There are special deductions that are written in the tax code that actually benefit members of Congress. So you know that they want to be able to take the deductions, and they don't let the IRS go willy-nilly and just totally deny deductions to people. So for example, have you ever seen, or you know someone that works for an airline and all of their kids get to fly free, or their parents get to fly free on the airlines? Okay. Back when the tax code was passed back in the 1980s, that's because there was a member of Congress whose daughter was a stewardess for an airline company, and he really wanted to fly free. Okay. So he literally fought to have in the tax code that airlines could deduct the expense of giving a free flight to a direct family member, direct meaning a parent or a child of a member of that company. They wrote in there that they could deduct the cost, or that given up seat, they could take it as a tax deduction. So if they had free seats, they could fill them with these family members, and then all of a sudden, yeah, they gave it away for free, but they weren't going to make money, and now they can take it as a deduction for what they would have charged for the seat. Okay, he wrote that in there specifically because he wanted to fly for free. Okay, those are the kind of things that are in the tax code. There are, I mean, it's crazy the different things that are in there and the reasons why they're in there. So again, you can take deductions, you just have to do it the right way. You need to know the tax code so that we can take it the right way. But as long as you have that, as long as you're getting those, we can save you a ton of money on taxes. Again, a lot of this will come from deductions. Other monies that we save is going to come from maybe taking the mark-to-market election. Again, we'll get in the weeds with you as much or as little as you want, but we can give you an estimate of what it costs and how much it's going to save you. Okay, and like I said, the whole goal here is to save you money. So you call 1-800-938-9513 or hit us up, www.tradersaccounting.com/TGO, free 30-minute consultation with Raven or with me. Likely going to be with Raven. Like I said, she's awesome. She knows this stuff like the back of her hand, and we'll be able to see if we can save you money. All right. I will turn the time back over. Thank you guys for listening, and thank you to Top Gun. And I really enjoyed being here, guys. Thank you very much. Look forward to talking with you. Bye.
Awesome. Thanks, my friend. Well done, Kent, as usual. Like I said, I learned something every time Kent talks, so thanks for coming, my friend.
Thank you very much.
You bet. All right, folks, we are right on time, on schedule. Jody Samuels is up next from FX Trader's Edge, wrote a great book, The Trader's Pendulum, the 10 Habits of Highly Successful Traders. Again, I learn something every time I hear Jody speak, so I'm going to get out of her way. So, Jody, let me throw it over to you, and let's get airborne.
Can you see my screen?
We got it. Loud and clear. See your screen. Everything's good to go.
Okay, so I should start?
You can get airborne. Go ahead.
All right. Well, before I begin, I'd like to thank Top Gun Options for inviting me here today. And today I'm going to speak about a topic that I am very passionate about, how to help traders reach their full potential as traders and reap the rewards that trading brings. And actually, this is what my book is all about. It gives you a practical foundation to building your trading business, i.e. building that trading account. So let me ask you this. Are you spending too much time spinning your wheels without making progress? Not sure what techniques to apply? Want to waste less time analyzing the markets and more time taking profitable trades? I'm sure you could all relate to these questions that I'm asking you now. So in today's session, let me help you see a clearer vision for your trading business by sharing with you what I think are the top 3 habits for you to develop in your trading business. And at the end of my presentation, I'm going to share with you a way to stop spinning your wheels and waste less time analyzing the markets so that you can take more trades that make sense to your bottom line. Now, I guess I should just give you a short introduction about myself. I actually wrote this book from my 35 years trading experience. I started in New York trading on Wall Street and was with a major U.S. investment bank for 14 years. So that's where I got my trading experience. So this book really is about me, comes from my experience and all of the challenges that I met along the way during my trading journey. So right now, today, I'm wearing my coaching hat in this presentation. So let's get started. All right. All traders ride on a pendulum every day. I hope you would agree with that. Unsuccessful traders ride the pendulum back and forth with no real idea of the pendulum's swing. Successful traders recognize that the pendulum swings and ride it mindfully. As a result, they make better decisions and better trades. So the pendulum factors represent 2 situations arising from trading the markets. Picture a pendulum swinging back and forth. So on one end of the pendulum swing, there is one thing happening, and on the other end, there is another, often opposing thing going on. Ideally, you as a trader want to remain or get back to the neutral position because staying at either end can be unproductive. And let me warn you, there's nothing you can do about the pendulum swings, but you need to learn how to ride them like all successful traders do. The lack of skills to weather the swings is what makes trading an emotional, psychological roller coaster ride for traders. And believe me, I experienced this all myself. Trading in the 80s, I traded currencies. That's what I started with. It was an emotional, psychological roller coaster ride. The swings were enormous. Sometimes the currencies would trade, I don't know, just hundreds of pips in a day, like almost 1,000. And there are 3 types of pendulum swings that I would like to speak about, however. The market pendulum, the financial pendulum, and we'll wind up with the emotional pendulum before we get into the top habits. So the market pendulum. The market trades up and down all the time. But as we mentioned, skillful traders know when to enter and exit a trade. They've learned how to recognize the pendulum swings in the market and not to enter the trend trades after extreme and exhaustive moves. They readily understand the market cycles and will only enter after the corrections or a break to new highs, for example, or lows if you're trading currencies. The market pendulums are the trends and the corrections. So to trade the market pendulum, you really do need to have a strategy which you can use to trigger your trades and exit your trades. And I personally use Elliott wave analysis to ride the market pendulum. So riding the market pendulum is really, really key. Financial pendulum and riding it mindfully. That's what this is all about, riding it mindfully. Financial pendulum. Making money from trading isn't a one-way street. On one end of the pendulum, there are times when you make money, and on the other end, there are times when you lose money. but both winning and losing money are part and parcel of trading. Everybody, every trader loses money, even successful traders. But it's important not to bet the ranch so that if it is a losing trade, you lose the entire account. It's all about managing the money in the account so that when you win big, and when you lose small. Okay, the emotional pendulum. The emotional pendulum is best described with the fear and greed continuum. On one end of the pendulum swing, you have the desire to earn more money from your trades and might be driven by greed to take larger positions irresponsibly, especially if it's going your way. You want to add to the position and keep adding to the position, and that's fine in a totally bullish market, but it's not fine when then suddenly the market reverses. But on the other end, you are in fear of losing money, and your actions might be held back by fear. So learning how to balance between these two factors is the focus for you as an investor or a trader. Next. So what I have here are emotional pendulum scenarios that traders deal with every day in their trading. And fear versus greed summarizes really all of the emotions below it. So calm versus nervous, actually, calm is when you're centered. You're not at one extreme, but nervous is when you're at the extreme of either fear or greed. So you really want to do some techniques to calm yourself and to just really calm those emotions. Meditation might be an example. That's what I've started to meditate to calm my mind. Self-doubting versus overconfident. Well, self-doubting can lead to fear of triggering the trade, fear of taking the position at all. Maybe you've had a series of losses and you're just afraid to pull the trigger. Overconfidence comes when maybe you've had a bit of a winning streak, or you've had one good trade, and that gets to the greed side of the equation. Cautious versus reckless trading. Cautious that's when you're centered, you're balanced between fear and greed. And reckless, well, you can be reckless when you're in fear or when you're in greed. Organized versus disorganized. This is really important. At least it's important for me. I really need to be organized in my trading. If I'm disorganized, then I'm scattered. I'm all over the map, and that's where meditation helps me. Flexible versus stubborn. Well, that's the same thing. Flexible. When you're flexible, you have an open mind. When you're stubborn, you're fixed to your position. You're stuck on your position, and you know where that can lead. You take a position and you set a stop loss. It moves against you. You move the stop loss, and then you lose more money than you intended. Well, what good is that? There's always another trade. You can always get out of the trade at your designated stop loss and get in again if it starts moving your way. So do you agree that you want to become a trader or an investor who can ride the pendulums well? Well, then you need to become a successful entrepreneurial trader, which is the subject of this presentation. But first, let me just tell you about the technical trader's trap. So meet Farah and Fred, our technical junkies in the trader's trap. Both of them are pretty similar in their search for finding the next best system, spending lots of money on buying systems and losing money trying them. So they're both frustrated. Frustrated Farah, frustrated Fred. And in short, they're out of shape with no business plan. They're not making money consistently. They lack discipline. They trade emotionally, and they have no trading plan. So that's Farah and Fred. Well, if you want to become an entrepreneurial trader, let me tell you about Steve and Stacy. There are transformed entrepreneurial traders. So Stacy started her trading career slowly and steadily. It took her months to settle on a system and run tests to prove her strategy, one with which she was finally comfortable. And selecting her system was a long and painful process because she spent a lot of time doing it, and she traded on her demo account. And once she was making consistent income, that's when she went into her live account and she started to trade very, very disciplined. She was in shape, did her business plan. She actually did make money consistently. And most of the time she trades unemotionally. And Steve is the same. He starts his day, he trades all morning until 12 o'clock. He starts his day and he gets organized. He reads the news, he goes online, he reads what went on overnight. And he jogs in the morning, so he has a discipline of focus and determination. And these are important for him because he's actually operating out of his home, and he needs to find himself really create habits so that he shows up punctually at his desk at a certain time. He reviews his notes that he made, his trade plans, and starts planning his trading day. So every morning he follows a routine, a set of well-defined steps. Both Steve and Stacy used to be technical junkies, but they've transformed themselves into successful entrepreneurial traders. So they both have a business plan, make money consistently, and trade with discipline, trade unemotionally for the most part, and operate with a clear trading plan. In short, they are in very good trading shape. Well, here's how they became successful. This is the trader's quadrant. Stacy and Steve both moved from the left side of the chart to the right side. What does it take to move from the left side to the right side? Learning the 10 habits of successful traders. So on the left side is the technical trader's trap. And new traders and experienced traders can live there. It just means that you're still continually searching for the next best trading strategy, for the next best mentor, for the next best whatever's out there. And granted, technology is really changing the world very, very rapidly. So I don't want to really say that you shouldn't keep reading and be in touch with the latest. But once you find something that works, even if it's boring, if it makes you money consistently, stick with it. And if you want to try something out, a new strategy, or you want to start automating some strategies, well, try it out first on a demo account. But if trading is boring, that can be a good thing. So do traders on the left side keep track of their trades and learn from their mistakes? Probably not. Do traders on the left side trade at organized times during the week? Probably not. Do traders on the left side just take trades and hope for the best? Probably. On the right side is the transformed trader. A new trader can develop good habits and become successful. An experienced trader can learn from their mistakes and become successful. Let me ask you a question. How many of you think that trading looks simple? And how many of you think trading is easy? And what do you think is the difference between simple and easy? Well, I'm going to tell you. Making money in trading can be simple, but keeping it isn't easy. Making money is about understanding the market, but keeping that money is about understanding you as a trader. It took me a very, very long time to understand that simple statement that making money is simple but not easy. And it took me a long time because I didn't realize that trading was really the mirror image of what was going on in my personal life, when in fact it was. And I noticed that when I was unsettled in my personal life, when things were happening and stuff happens, it really impacted my trading as a discretionary trader. So during those times, I had to just sit back and maybe not trade for a while until I sorted things out. So you might notice that as well about your own trading, that what shows up in our life tends to show up in our trading. If you hear a voice within you say, you cannot paint, then by all means paint, and that voice will be silent. Vincent van Gogh, famous Dutch painter. Van Gogh wasn't well known at the beginning, but he kept painting. Practice builds confidence, and by continuing to build new skills and habits, we conquer those inner voices which might stop us. If you don't have confidence in your ability to learn new skills and habits, who does? I want to talk a little bit about building habits. I spoke a little bit about discipline, but really, I honestly believe that trading can be a series of habits that we learn and master. And when I use the word discipline, I feel that's just a little bit too harsh because not everybody is disciplined. But if you think about just building habits and practicing those habits one habit at a time, it's a softer approach and it works. Because it really is, like, some people are disciplined, okay? But some people aren't. But everybody can spend the time to build habits, repeatable habits, and do the same thing the same way every single day so that it becomes rote and it becomes a habit so that it feels like discipline. I don't know if you're following me on that. But if you're in the camp where you say, gee, I'm not so disciplined, don't worry about it. Then just build your habits one habit at a time. And that's really what my book is about. That's what I stress. So now let's get into the first habit that I want to talk about today. This is habit number 5 in the book. Understand and exploit your unique trading personality. There are many, many different trading styles due to the simple fact that everybody is different. Different personalities are better suited to certain trading styles. Not only that, some people have a lot of time to trade, and other people have full-time jobs and they want to trade as a side business. So it's even more than your trading personality. It's what time you have. So if you enjoy sitting in front of the screen watching the market action, you may prefer momentum or day trading, and that is if you have time for it as well. So that would be in the upper right, short-term momentum or day trading. If you like to analyze the markets, establish your trade plan, and let your trade play itself out, you might be better suited to swing trades. You may set 3 different profit levels and hold positions for 1 to 3 days, for example. And you don't mind holding overnight positions. But I know I've met so many traders that say, I don't want to take home positions at night. I want to sleep at night. And that's really a function of what you can handle. And of course, you can always grow into taking bigger positions, carrying positions overnight. You can grow into that. It doesn't happen overnight. You know, you start a certain way and then you evolve as a trader. As a long-term position taker, you're looking to hold your positions for at least a month if the market is going your way. Or if you have a portfolio of stocks, you're holding your positions for a long time. We've been in the longest bull stock market ever. And really, if you picked good stocks, you really didn't have to worry too much about the stocks moving. We had a few corrections and now as well, but for that, you still need mental stamina, patience, and the ability to ride out drawdowns for when we do correct in the markets. So that's a long-term position trader. Now, if you haven't experienced losses as a long-term position trader, then you really need to have a look at your portfolio and say, okay, you need to have a fallback plan. All right, especially if you're investing in individual stocks, because you certainly don't want to see a stock move 30% against you or 40% against you without doing anything about it. So that's part of your trading strategy and your trade plan. There's no right or wrong style. The key is finding the style that suits your temperament and lifestyle. Short term, medium term, or long term. Now, if you're just starting out, if you're just learning how to trade, and let's say you're trading futures, or you're trading Forex, I would say that you want to take as many trades as possible to get a good feel of the markets that you're trading, so that you either back test or you trade short-term momentum or day, and you just take as many trades as you can, but you're on demo, okay, until you learn your strategy. Because if you have a strategy that works for long-term positions, it's going to work for short-term momentum or day trading positions as well. And that's because the markets are fractal. That means that the markets, the patterns repeat themselves over and over again. So the same patterns are repeating themselves on a 1-minute chart, as an hour chart, or as a daily chart. You just need enough data to be able to recognize those price patterns and pull the trigger and take that trade. So I always say start by taking as many trades as possible, and then on demo. And then once you learn your strategy, yes, back test it on the longer time frames if you have a full-time job and you want to look at the markets once a day, for example. But you just need to take a lot of trades to build that bank account up, to build that confidence. Now, there are sort of two different types of traders, systematic and or discretionary, and they really are at opposite ends of the spectrum. So a system trader will spend hours each day testing systems on different markets, different time frames, etc. You might trade 20 different markets using a mechanical system with very little emotion attached to individual trades. So as a system trader, you're not taking the trades yourself. The software is, so that tempers the emotions a bit. A discretionary trader, however, is quite different. The trader will pore over charts and make his or her decision and watch the screen in order to pull the trigger for the trade. A discretionary trader still has a system, but there's a human component as well, to trade or not to trade. That's always the question. And he or she may not pull the trigger every time, and that goes back to the fear versus greed. Or he or she may assign probabilities to the trades and only take the ones with the higher probabilities. So the decision to go into systematic or discretionary depends more upon the trader's temperament than on objective results or numbers. And also skills, I would say skill set. But whatever path you choose, you have to learn as much as possible and grow into an expert in your area. So what some traders do is they semi-automate their trades. They understand the system that they're using, but sometimes it's hard to make it totally mechanical, to automate the system completely. It's difficult. You need a really good programmer to do it. So sometimes semi-automation is also okay. Semi-automation would be alerting you to when your trading strategy, your trade setup is there. Searching through many different markets to see if it's time to pull the trigger. So that's what an example of semi-automation. And then totally automated trading, algorithmic black box, high frequency, well, that's really, that's left to the institutions, but it's moving more to the retail arena also. I know many traders who have many different software programs running on data, because data is, we have the data, and taking trades. And then it's really a portfolio of systems that you're managing. But I do recommend understanding what's behind each system and really understanding the results, so that you know what the possibilities are. So habit number 6, follow a system. Okay, now we're into the second habit that we're going to discuss. Follow a system. If you look at highly successful organizations such as Microsoft, Amazon, Walmart, you'll find these companies are doing the same thing the same way every day with consistency. They find a winning formula and adhere to it. So ask yourself if you have that winning formula to get that trader's edge. And if so, are you executing that formula or system consistently so that you have the confidence in your ability to follow it? You may have started out by going to lots of seminars, taking loads of courses, reading books, going to online seminars, and trying so many different systems out there. And at some point, you need to stop jumping from system to system and take a step back. Develop your own game, your own system. You will formulate what works for you. And it's okay to have a little coaching to give you ideas and point you in the right direction. And I also understand that there's so much stuff out there. Heck, I get bombarded all day long with marketing stuff, and I'm thinking, and sometimes I take a look and I'm thinking, I don't even understand. I don't even understand what they're trying to, sell here. So it can be very confusing, and sometimes you just don't really know what's good and what isn't good. And I hear you, and I don't really have an answer for that. There's a lot of stuff out there. So you just have to be patient and just speak to people before you sign up for something. And I don't know. I'm always available as a coach if you want to run stuff by me. I offer a free coaching session. I guess I wasn't even going to say that, but you can probably find that on my website, fxtradersedge.com. So follow a system. Habit number 6. Now, also, as a discretionary trader in particular, you want to have a specific chart set up. So the markets, the time zones, and the time frames that you want to trade in are defined here. Which time zones are you going to trade in? Are you just trading in the New York market? Or if you're trading currencies and you want to trade the Asian market or the London market, or do you want to trade when London and New York are both in the market, when the liquidity is high? What markets are you going to trade? Are you going to trade different stocks? Are you going to trade currencies? Are you going to trade? Do you like futures markets? I mean, you just have to make decisions and stick with it. And then you have your chart with indicators or candlesticks, or you might follow price action. You just need to be organized in your trading with your specific chart setup. Then you might have some general rules. This lays out a set of rules that hold true for every trade. It mainly serves as a reminder for you to stick to the trading system. Or your trading plan. You might write down 10 different rules if you notice some patterns happening that you tend to veer, you don't stick with your entry, you tend to move your stop. So you can just set little reminders, almost like a checklist of general rules that you will follow. Like one rule might be, don't take a trade after it's had a big move. Have a look, let the market digest and let the market settle back, and then take a look at it. But don't jump into it until let price come to you, for example. And then entry and exit rules. You need a system to show you what triggers the buy and sell decisions. And those would be the entries. And the exits include stop losses and targets. So you need to figure out your style. And actually, let me see what I have on the next page. Yeah, trade management is part of that. How are you going to, taking the trade is one thing with proper money management, but trade management is what separates the really successful traders from the unsuccessful traders. And the strategies for trade management go from simple to more complex. The first one is what all novice traders start out doing, getting in and out all at once. You take a trade, you get in, and then you get out. You either get out in a profit or you get out in a loss. The next is to get in all at once and take profit at various levels. The third is to get into the position at various levels and get out all at once. Getting in and out at various levels, that would be complex trade management strategy number 4. So when I developed the 3 profiteers, which is the trade management strategy that I use, I was doing it because if I would get in and out all at once, I would feel like I would get out too soon and miss the big move, and my perfectionism would kick in. And I would say, oh gosh, look, what now? Do I get in again? Like all these questions would get into my head. What do? I got out of my trade. It's such a good trade. It's still moving in my direction. Or I would, because I only had I would get in all at once and the market moved in my favor and I didn't take profits part way, then it would end up going against me perhaps, and I would end up losing money on the trade. That was also a possibility. So what I did was I developed a strategy, a trade management strategy to get in all at once and take profits at various levels. And I would use Elliott wave targets and then work backwards using the 3 profiteers to set 3 different profit levels. So that way, if the market moved in my favor, I would be taking profits along the way. And if it continued to move, I was still in the game. I still had some profit potential, and I would move my stop losses accordingly. And that works for me, getting in all at once and taking profits at various levels. If you have a portfolio, let's say a portfolio of stocks, then you might do things a little bit differently. Like maybe you have a basic position for a certain stock that you really like, and the market moves your way, and maybe you have some more money. Maybe you're investing, you're putting some money from your the money that you make once a month, so you have some cash to be invested. Well, then you would look for another opportunity in that stock to put money into it. But you still want, so that would be getting in at various levels. You still need to manage your trade and really look at that stock and say, okay, as long as the market continues to move up, I'm still in. But if we move down a certain percentage, or if we go below this level, then I really think I should say, thank you very much, take my profit and be out of it. So that would be getting into the position at various levels and getting out all at once. So you can decide what trade management strategy you want to use, but trade management is really important because we want to be able to keep the profits larger than the losses, right? Especially if you're not trading stocks. Let's say you're trading futures, or you're trading Forex. You want to be able to ride those profits, ride those gains, and keep your losses to a minimum. And that way, you can even have 50 to 60% winning trades and still make money. You don't need a 90% win-loss ratio if you're keeping your profits bigger than your losses. Another success quote. And the day came when the risk it took to remain tight inside the bud was more painful than the risk it took to blossom. Yeah, I mean, I hope that as you evolve as traders, you will clearly blossom and just evolve and grow as traders. That's really important, and learn more about yourselves, and work with what you have, and develop habits to make you successful. Okay, the third habit that we're going to discuss, habit number 7 in the book, is plan the trade and trade the plan. Hang on, yeah, follow the system, plan the trade and trade the plan. So I threw out a few terms already: trading system, trading strategy, trade plan. What's the difference? A trading system, I like to view that as a collection of trading strategies. So you might have a trading strategy for a sideways market. You might have a trend trading strategy. You might have a trading strategy for stocks. You might have a different trading strategy for certain currency pairs. So trading strategy itself is entries and exits based on price action, analysis techniques, and or chart setup with indicators. Whatever it is that you use to decide to pull the trigger, that's your trading strategy. When will you enter the trade? When certain moving averages are at a certain point, when price is above certain moving averages that you're following, when price action dictates that you've been in a sideways market, and when we break above, you're in buying. You have to literally write down what's in your head. What causes you to pull the trigger? In FX Trader's Edge, we use a strategy called the wavy tunnel, and that's an Elliott wave-based strategy. It's a bunch of moving averages and oscillators, and it really works. It mimics the Elliott wave counts very, very well, so that I can look at a chart with the wavy tunnel set up on the chart and see what kind of wave we're in. If we're in a trend wave or a sideways consolidation, and we have we have trades that we take based on. We have 6 different trading strategies, 4 trend trading and 2 end of trend trading strategies that form our trading system. Now, the trade plan is a set of rules for when a trade opportunity arises. So let's say that the market is ripe and ready for a buy based on your trading rules. The trade plan would tell you your entry point and your exit point. So if you're using the 3 profit tiers, you would have where you enter the trade and where your 3 exit profit taking levels would be, and where your stop loss would be. So your entry and your exits, and the exits include your profit, where you take your profits, and where you set your stop loss. That's your trade plan, spelling out exactly where you enter and where you exit your trade. Now, if you're day trading, momentum trading, scalping, a little bit different. Like you've practiced, you've rehearsed. You know when you're in, and it's automatic when you get out. You're not looking for big profits. When you're momentum or scalping, very often your win-loss ratio is higher. You're going to be winning more than you're losing, and the size of your loss very often is pretty close to the size of your win. So I hope I explained the difference between the trading system, trading strategy, and a trade plan. It's like a top-down approach. Okay. The path to greatness lies not only in our performance, but in the systematic practice we put into the performance. So back to building habits again, right? Practice, practice, practice. Practice makes perfect, right? Didn't your parents always say that to you? I know mine said that to me. Oh my gosh. Trading mastery is a function of internalizing market patterns, rehearsing execution skills for trade entries and exits, and learning from the constant market feedback mechanism. Without a trade plan, our emotions get in the way, and traders run the gamut on the fear to greed continuum. Planning the trade and trading the plan is the best practice we need to develop solid habits as a successful trader. So you've heard this all before. Now, column number 3 says something about trading blotter. When I first started trading on the desk in New York with JP Morgan, yeah, that's where I work, JP Morgan. My boss had this trading blotter, and it was this huge piece of paper, and it was like a pad of paper, and we would write down what was going on in the global markets, and in the other markets we were trading currencies, so we would write down what the interest rates were doing in different countries and what the stock market was doing. Anyway, I created a trading blotter for traders, which shows the analysis, the steps that one needs to take in taking trades. So doing the analysis, having your trading system, and maybe it's in the form of a checklist, then looking for high probability trades, and then creating your trade plan, and then looking at your trade at the end of the day if you're a day trader, or at the end of the week if you're a swing trader, or at the end of a month if you're a position taker. And this is what it looks like. And you can do this for yourselves. This is just something that I developed. So the top, we have 3 rows here. The first row is about the analysis. Now, I already told you that I'm an Elliott wave specialist, so I look at Fibonacci and I look at wave counts. So I put together just some analysis to do across the top. And then on the upper right is cross markets analysis. What are the other markets doing? In the middle is support and resistance levels. So you can use pivot points, you can use Fibonacci. There are various ways to generate support and resistance levels, but the market looks at support and resistance levels. You need to know where the market could settle because it settled there many months ago. The middle row is a checklist on the left. So you have your trading rules, indicators / confirmations from your trading strategy. And then on the right is your trade plan. What is your entry and your exit strategy? So where do you get in and where do you get out? Where do you set your stop and where do you set your profit levels? Then at the bottom, and you can take a screenshot of this and set up something on your own if you like the format. On the bottom, we have the post-mortem analysis, because we already said that trading is very much, especially if you're a discretionary trader, very much about ourselves, and what shows up in our lives shows up in our trading lives as well. So feelings before trading on the left, and then actual trade planning in the middle, and then actual trade results on the right. So in terms of feelings before trading, this is just a way to track how you were. Like if let's say you had a nice trading day or a nice trading week, it's a way to look at yourself. Was I in a good frame of mind? Had my last couple of trades performed well? Was my personal life running smoothly? Was I in the zone? Did feelings of perfectionism creep in? Was I feeling overconfident? That moves to the greed side, right? So just take a little check on how you were, and you'll see that it will correlate with your trading results. It's uncanny, but it really, really will. Actual trade planning. Did you do the work? Did I plan my trade based on solid homework preparation? Did I get all confirmations I needed for a high probability trade? Once I entered my trade, did I trade my plan? Was my trade impulsive or based on someone else's tips? And just a note on that, based on someone else's tips, there's nothing wrong with getting like a list of trade recommendations from other people as long as you do your own analysis. And sometimes it's easier to do that, in fact, especially if you're trading stocks, because they're doing the work to come up with what they think are the best stocks to buy. And then what you need to do is just have a look at the stocks and say, would I be buying it here? And do I like the fundamental analysis? Sounds great. Yeah, I do like the stock in principle, but from a technical analysis perspective, is this where I want to be buying? So you don't just take the trade based on someone else's tips. Was I satisfied with my results, or did I show regret? Did ego take over? So these are all questions that you can ask yourselves. And then the actual trade results. Was your P1 target hit, your P2 target hit, P3 target hit? You can just check it off. Was your stop hit with profit? Did you manually exit and profit? I mean, this is just a quick and dirty way for you to keep track of what you're doing. And if you'd like a copy of this, you can email me, Jody, Jody, at fxtradersedge.com. I'm more than happy to send it out to anyone who asks. Okay. Well, we just learned what 3 of the 10 habits of successful traders are. The simplest way to succeed in trading is to learn from the best and model their habits. Why should you practice these 10 habits? Because learning them will help you save time and effort, make more money, and achieve your full potential as a trader. And that's what it's all about, achieving our full potential as a trader. And it's a lifelong process, isn't it? It's really lifelong. And one of the things that we discussed is habits. So how can you replace your negative habits with positive habits? When you examine the positive habits of successful traders, you might discover that your own habits need a little changing. They need a little upgrading, right? Maybe they prevent trading success because they're not habits. You're not following what you've designed for your trading business. So find out how you can replace the negative habits with the positive ones. And it is my hope for all of you today that you achieve much personal and trading success in the many, many years to come. So before I take questions, I'm going to let me just move before I take questions, let me show you what we have to offer. I told you that we are Elliott Wave specialists, and I'm just looking to see if there are questions for me. Okay, we are Elliott Wave specialists, and we have a wave counting service on our Elliott Wave desk, which is powered by FX Traders Edge. That's the company FX Traders Edge, but we have the Elliott Wave desk, and it's a counting service for Forex indices and commodities. We count and you trade. Elliott Wave desk, your personal Elliott Wave analyst and strategist. So why I developed this, you might ask, is because while I was sitting on the desk at JP Morgan, we also had our own strategist sitting on the desk, and we hired him from the Chicago Board of Trade, and he was an Elliott Wave analyst. So I had my personal Elliott Wave analyst and strategist sitting on the desk at JP Morgan. And that's why I've structured it the same way, because it worked for me then, and it works for me now, and it works for many other traders as they get up to speed on their Elliott Wave skills, okay, or not. So we offer a premium full access service. All you have to do is go to elliottwavedesk.com/start. And this is what it comes with. It comes with daily 4-hour and 1-hour charts every single day. So literally, it's on the website. You click on the chart, and you'll see the daily wave counts, the 4-hour wave counts, and the 1-hour wave counts for 16 different markets. The euro, the pound, the Aussie, the dollar yen, the New Zealand dollar, and the dollar Canada. So all of the US dollar pairs, the major ones except for the dollar Swiss. And then the 10-year US bond, gold, oil, and then 5 stock market indices, the S&P, the Dow, NASDAQ, Russell, and DAX, and Bitcoin and Ethereum. You also get a daily video. So daily video once the wave counts are put out to discuss high probability trades. Plus bonus access to a Back to Basics seminar, which I'll tell you about, and new trade ideas released on SMS or Telegram. And I'll show you what the results are for that. So in 2018, the trade alerts made 3,048 pips. It was, that's a lot of pips in 1 year. 2019, we are up 245 pips. so far, so not as strong as in 2018. So this is an example where you would look at the trade ideas and decide, okay, it's like getting a trading tip and say, okay, am I going to take this trade or not? And if you decide not to take the trade, you don't take the trade. Now, in 2018, it was a good idea to take all the trades. Maybe in 2019, not so. So you receive trade ideas on SMS or Telegram with the market entry price, the stop loss level, and the profit taking target. And this strategy used is to take small losses and larger profits. So in 2018, on a modest $6,000 mono portfolio with our parameters of between 1% and 2% risk per trade, the results equal between like 100% return and a 200% return in 11 months. We take this live, so our return was we don't risk more than 1%. So that actually ended up being a little less than 1%. So not quite doubling the money. The Back to Basics seminar with 1 month of our premier market analysis. So the first module is about becoming a trader. The second is about market structure. So all about support and resistance, pivot points, Fibonacci, all different ways that you can apply support and resistance techniques, trend lines, trend analysis, etc. And then module 3 talks about the market fundamentals and candlesticks. We use candlesticks as Elliott wave technicians when finding the end of the trend in particular. And then module 4 is a little bit about Elliott wave analysis. So it's you can get this. We charge $75 a month. And I would urge you to try it out for 1 month. It renews at the end of the month, but you can cancel at any time. So that's really all I have to say. ElliottWaveDesk.com/start. And now I'm happy to take questions. But I'm not sure I'm seeing any questions.
Yeah, for some reason, you guys, the presenters couldn't see the questions today. I'll ask you a couple if you don't mind. Terry's asking, what do you mean by "was I in the zone"?
Oh, okay. When you're in the zone, it's like it's a meditation word, I think. It means that you're really just, another word that we use to describe it now in today's terminology is being mindful. So when you're mindful, when you're totally focused, when you're focused on the present moment, when you're focused on what you're doing and you're not thinking about all the other errands that you have to run or all of the, the whole list of things that you have to get done in a day, you're in the zone, you're mindful, you're focusing on your trading, and that's about it. That's what being in the zone means to me.
Okay, perfect. Let's see. How do we get a copy of your book and copy of this daily trading blotter?
Perfect. Okay, please email me, jody@fxtradersedge.com, JODY, to get a copy of my trading blotter. To get the book, you have to go to Amazon and order it. I don't sell my own books. Wiley published this book, and you can find it either in your local bookstore, maybe even in the library, I'm not sure, but you can certainly buy it on Amazon or the Wiley website.
Okay, perfect.
And it's called the Trader's Pendulum, the 10 Habits of Highly Successful Traders.
Okay, somebody made a comment up here. Someone once said trading is the hardest way to make easy money. Any comments on that?
Yeah, and I think I alluded to that with when I gave the statement, trading is simple but not easy. And some of us, let's face it, are more emotional than others. We started by talking about the pendulum and how we have the emotional pendulum that we have to deal with. So taking the trades is easy, but then what happens when the trade moves against you, or when it just sits there and it does nothing, and then your head starts to have all this chatter because you don't have a plan in place, and you let the market the market will do its thing no matter what you're thinking, but your mind is thinking all kinds of thoughts. So let's say you get out of your trade before it actually moves because you don't have a plan in place. Well, that makes it, that means that the market isn't easy. Like, you've let your own emotions get the better of you. So if you're a very emotional person, then I would say try to automate your trading strategy, because that is one way to remove the emotions. We need, as traders, to put all these tools in place to manage our heads. That's really what I found over the years, because I'm a fairly emotional person. I'm not your, I am. So I've had to develop all of these tools, and a lot of them I have in my book to help me not be involved with the pendulum swings, and to always make sure I get back to neutrality, to a neutral position. So yeah, it can be hard, but that's mainly because of ourselves and the emotions that we have to go through.
I love it. Good. Other than that, a lot of good comments and a lot of people saying great presentation, and they're going to reach out to you. So Jody, if you want to wrap up, we should be good to go.
Okay, that's great. Well, I didn't even ask, what people are trading in this webinar, whether you're trading stocks, forex, or futures. It really doesn't matter. It's all about coming up with your trading system, and the trading strategies are a part of that. And then make sure you have your trade plans and the tools in place to make trading simple and easy at the same time. So thank you very much. ElliottWaveDesk.com/start, or for the trading blotter, Jody at FX Traders Edge. Thanks so much.
Thank you, Jody. Everybody give Jody a virtual round of applause. Awesome presentation. I love the psychology of trading and everything that she covered. So make sure you reach out to her. She gave you her personal email, so we should be good to go. Awesome. All right, folks, we're going to get started here in a couple minutes. I'm actually obviously batting cleanup. So let me go ahead and grab all my stuff, and then we'll get going here. All right, great day so far. We kicked off earlier at 10 o'clock this morning with Stephen Brooks. Really good presentation from Ken Savage. I know a lot of members here at Top Gun Options enjoyed that, or hopefully got some of your questions answered about setting up an LLC business and all sorts of truth. Give him a call. I mean, Ken's a smart dude, 500-pound head. Jody, awesome trade plan and discussion there. And now we are going to get airborne with essentially what we call trading the Death Star. And the Death Star's having a very nice day today. So give me about 2 minutes, and we're going to get started right at the top of the hour, because I know some of our other members are coming right in 3 minutes. So we'll get airborne in 3 minutes, folks. Give you an opportunity to hit the head or recharge your cup of coffee, and then we'll get going. All right, folks, good afternoon. Let's go ahead and get airborne with the final presentation of our multi-speaker of trading the Death Star. And you're going to find out what the Death Star is in a little bit here. Very, very crazy stuff going on in the market. We're going to have to cover everything that's going on because literally it feels like this week we were going from headline to headline, tweet to tweet, and very, very interesting market that we're trading. But we're going to talk about a single name today and maybe teaching you how to become a market maker in your own name. Now, obviously, Top Gun options, fighter, pilot, all that type of stuff. Let me ask you a question. Which fighter would you fly? Let's take a look at that one. Pretty cool looking, a lot of what we call steam gauges. I think in that cockpit there are about 300 gauges and dials and a lot of stuff to monitor. That one or this one? Let me, you guys tell me, which one would you rather fly? So the first picture I showed you was the cockpit of an F4 Phantom. As I said, over 300 switches, dials, gauges. Man, it is, you had to look at everything. How about this one? On your screen right now is the JSF, the Joint Strike Fighter. This aircraft is so smart, it actually limits the data that it shows to the pilot. It says, you know what, she or he doesn't need to know that right now, so I'm not going to show it to him. Look at that, 2 flat panel displays, and that's about it. So why am I bringing that up? Because combat and trading are very, very similar. Guess what? In combat, as in trading, there's a winner and there's a loser. So why wouldn't you use the same methodologies that I use to succeed over the skies of Iraq? Matter of fact, just saw that the Abraham Lincoln, my old ship, is pulling in the Arabian Gulf and things are about to get interesting. But trading and combat can be complex, right? How do we battle complexity? Simplicity, folks, and that's what we're going to talk about. You're joining us right now at 1 o'clock on Thursdays, which is a regular live trade brief here at Top Gun Options. It's called Analyze Your Trade and Debrief. So we kind of debrief the trades we did through the week or existing positions. So welcome aboard, and obviously all of our members are in here. My name is Matthew Buckley. My call sign is Wiz. I flew the FA-18 Hornet for the United States Navy for about 15 years, graduated from the Navy Fighter Weapons School, which many of you know as Top Gun, and did a couple cool things in the Navy. Got to fly in a bad guy jet over Pakistan, got to fly with my buddy when he was on the Blue Angels, was an LSO, a landing signal officer. So that's me on the right with that squared away haircut. I'd be on the back of the boat day, night when I wasn't flying, trying to help my fellow aviators get aboard. And then there's the Arabian Gulf right there, folks. If you've never seen it, you've just seen it on a map. There's Kuwait, there's Iraq, that's Iran. And right over there somewhere underneath my nose is the Abraham Lincoln, as a matter of fact. So flew 44 combat sorties over Iraq. Okay, how'd you go from the cockpit to the trading pit? Well, poor kid, middle class. My mom hates when I say that. How about lower middle class Irish Catholic family from South Jersey, one of 6 kids. Loved that we grew up on the Jersey Shore, not the bad MTV one, the good one. Was always taught service above self, serving my country, loved flying, loved the water and the ocean, so decided to set my sights on becoming a naval aviator, but was always interested in finance, right? You don't join the Navy to be rich. You join the Navy to serve your country. So I was always interested in finance. And what was really interesting as a young naval aviator, I applied everything that I was learning flying a fighter aircraft to my trading, right? Managing risk, contingency planning, having a strategy, implementing tactics. I applied all of those things to my trading, and man, my results went through the roof. I kind of thought this, it ain't rocket surgery. Everybody's got to be treating it like this. And I found out soon that they weren't. I popped up on the radar of one of the largest options trading firms in the world, headquartered right there in the Chicago Board of Trade. If you're not familiar, that's the intersection of Jackson and LaSalle, and that's the CBOT. Chicago Board of Trade, that was our trading firm right there. Those big Windows, beautiful trading firm. Had a blast when I was there. I helped build a hedge fund. I helped build the retail brokerage known as Options House. And then I built my own company when I was there. I was the founder and CEO of the Options News Network, ONN.TV. We were kind of the CNBC for options. I know John and Pete kind of play lip service to, as much as they can to the options world on CNBC, but we were dedicated, man, to options, helping retail traders like you all get a behind the scenes look at what was going on the floor of the SIBO. Had an absolute blast doing that. No offense. Well, I like to say I felt like Eddie Murphy in Trading Places, but I gotta be honest with you folks. The so-called smart money wasn't necessarily that smart, right? They put their pants on one leg at a time, just like I did. And the more I looked behind the curtain in Chicago and London and New York, I figured that, hell, the smart money ain't necessarily that smart, and I could do just as well, if not better, than them. No offense to anybody who lives in Chicago, you can keep it. we lived out in Napertucky, out in the suburbs. But hey, man, 9 months out of the year, I'm a beach guy. I'm a Navy guy. I took my my squadron down here about 10 years ago to God's Waiting Room, Boca Raton, and Fort Lauderdale, and Top Gun Options. We are going on our 10th year in business. We've been literally trading over 10,000 folks. I think our latest metric was, so 10 years in business, and we're having an absolute blast. Okay, time to get airborne. What we're going to talk about today is essentially one name, right? Well, Wiz, it's a stock market. It's a market of stocks, right? Well, yeah. Let's just talk about trading one name, though. And this name is Amazon. Folks, a couple of weeks ago, it brought a tear to my eye when the Oracle of Omaha, what did Warren Buffett say? I'm an idiot. Warren Buffett called himself an idiot for not investing in this stock years ago. Folks, we've been trading Amazon for 10 years here at Top Gun Options, and now we have just a live trading service focused on trading in one name. But before we talk about the benefits and how this is cool and everything like that, I always want to contingency plan, talk about the bad. What are the risks of trading a single stock? Well, we don't have to go too far back in time to take a look at some pretty bad examples of the dangers of trading in one name. Everybody remember Jim Cramer pounding his shoe on the desk? Bear Stearns is a steal at $70. You're an idiot if you don't buy it here. 2 days later, it was at zero, from 70 to zero in a blink of an eye. Lehman Brothers, right? Lehman Brothers is another one taking the sign down there. I think Lehman Brothers, 150-year-old company, gone in the blink of an eye, right? Lucent, some Petco or Pets.com, or obviously the graveyard is full of companies that if you just traded in a single name could be potentially bad. But take a look at Amazon, folks. Well, obviously this guy's a potential risk to trading just in Amazon, right? This guy can't stand Jeff Bezos, right? And a lot of people can't stand him, so I guess the feeling's mutual. But obviously Jeff Bezos owns Amazon, but he also owns the Washington Post, which ain't no super friend to Donald Trump. So there was, about a year ago, the president started tugging on Superman's cape, right? Jeff Bezos is destroying the post office, and we're gonna get him. That did impact the stock a little bit, and then after that, Amazon kind of shrugged off all these presidential attacks. Jeff Bezos has also done a great job of what? Flying under the political radar, which we'll talk about in a little bit. Some of these other FANG stocks, folks, putting their heads above the trenches, and the government's coming to put a sniper shot at them. Obviously, the risks of just trading a name like Amazon, there are risks. But if you look at Lehman Brothers or the Pets.com or Bear Stearns, obviously financial stocks can go to zero, folks, because what? They really don't own anything. I mean, hell, I just showed you the picture of the people taking the sign, right? It was a run on those banks. Hey, man, I'm closing my trade with Bear Stearns because I'm hearing they don't have the cash. What are you talking about? Oh, I am too. And they spiraled into the ground. Amazon ain't a financial stock. It's an everything stock. That's why I call it the Death Star. But let's talk about some of the benefits of just trading in one name. You ready for this? When you trade the same name, you can profit no matter what it's doing. Amazon's going up, I'm trading bullish. Amazon's going down, I'm trading bearish. Amazon's moving sideways, we do neutral tactics, right? There's a great neutral tactic that we trade called an iron condor. Another benefit, you stay focused on the news that impacts just Amazon, right? I do one-on-one private coaching, and one of my local coaching students, Doc, up in Boca, and he loves when I use him as an example because he's gotten better. When I looked at his portfolio the first time we chatted, he had 33 positions. I got to tell you, I physically started shaking when I saw this. Folks, if you're trading more than, as a retail trader, 7 to 10 names, you're nuts. You're absolutely nuts. And as I went, and I've done this with a lot of my coaching clients, as they go through their positions, they're like, well, I don't even know what this is or when I got into it, or that's crazy. So if you trade in one name, you're only focused on that name. Think of yourself as a market maker, folks. I got buddies in Chicago or New York that I have an Apple market maker buddy who doesn't even know there's a stock market. I mean, seriously, there's nothing in this world other than just trading in that name. So you stay focused on the news that impacts it instead of all sorts of different stocks or ETFs. So you become what I call a SME, a subject matter expert in that name, reducing time spent on other positions. 2 years ago, I had a very crappy trade on GE. GE came out and said, oh yeah, GE Capital is still losing money. Most of the analysts that covered GE were shocked because they had thought that GE had divested themselves of GE Capital. So when you think about it, if analysts get surprised by stuff going on in a name, if you're trying to be a jack of all trades with 20, 30 different positions, you're going to get hammered. So this cleans up your cockpit, so to speak, going from that F4 Phantom to a nice clean Joint Strike Fighter right there. So do you want to trade that or do you want to trade this? It's nice, it's clean, it's one name, and you can trade potentially any direction with it. Now, as we're going to see in a couple minutes here, I'm going to show you a live trade that I'm actually going to text out and email out live to my members. But we also in this service trade the XLY. Why? Well, about one synthetic stock contract in Amazon all the way out to June of 2021 will cost you about 22 grand. Oh, but again, think about it, folks. If you're just trading in that one name, that, maybe that's all you have, there you go. But we also in this service trade XLY. Why? Because as of today, 25% of the XLY, this is an ETF, is made up of Amazon stock. Look at that, about 25%. Just looked at it a little while ago. Now, this might, if you're really, it's one of those things. If you've always been taught, don't put all your eggs in one basket, diversify, and if you just can't wrap your mind around trading just Amazon, look at the rest of the stuff in the XLY. You got Home Depot, Mickey D's, Nike, Starbucks, Lowe's, Booking, TJX, General Motors, and Target. So there's your diversification right there if it creeps you out about just trading Amazon. So in this service, we have spreads all the way out a couple years, bullish spreads on the XLY and Amazon. I think the XLY long we put on, instead of coming out of pocket 22 grand for one contract on Amazon, I think we did 20 contracts on the XLY. That was about 11K. And obviously, I don't have 11K either. Don't trade 20 contracts, do 10, right? It ain't rocket surgery. You can kind of do the math on your own. So we do trade the XLY. The tactics, we establish base positions. What do I mean by that? I'm going to show you my trading screen in a second, but we hopped in our time machine, and for Amazon, we went all the way out to June of 2021 to get bullish. And we did what is called synthetic stocks. So these are kind of the base positions in Amazon and XLY. We could also, once you join the service, we'll look into doing what is called a long call diagonal. Both of these are bullish trades dated all the way out into the future. But as I said, if Amazon's going up, guess what we do? We trade bullish spreads. We're going to do that right now. It's going down. You trade bearish spreads, and you also can bring in a little premium by doing what is called selling front month calls against this base position to bring in a little coin. We did that this week and brought, what was it, $1,300 in a couple days, just selling some upside Amazon calls. And then if we're trading sideways, iron condor. Okay, so those are kind of our base tactics. So here's what I want to do is bring up our trading screen. So let me give you a quick strategic, operational, and tactical brief. Before we get tactical and start trading and stuff like that, we got to talk about what's going on in the world. My old aircraft carrier, like I said, the USS Abraham Lincoln, pulling into the Arabian Gulf. Things are about to get interesting. We've had a lot of people with tinfoil hats this week saying, the attack on those Saudi oil tankers was done by the U.S. to provoke a war. I mean, folks, if you believe stuff like that, I can't even help you. So, but if something goes bump in the night and we get some sort of war in the Middle East, man, the VIX will spike again and the market will pull back a little bit. Iran has threatened to close the Strait of Hormuz, and we have said what? If you did that, that would be considered an act of war. So don't do that. So how's this going to end? Does anybody, hell, our allies can't even get on board. This is the deputy commander of OIR, Operation Inherent Resolve. He's a Brit. He came out the other day and said, everything looks fine in the Gulf. There ain't no tensions in the Gulf right now. I've never, in my 15 years in the military and studying since I was a boy, military stuff, I've never seen such a public rebuke. Look at what CENTCOM released after this guy did this video. Recent comment from OIR's deputy commander run counter to the identified credible threats available to intel from U.S. and allies regarding Iranian-backed forces in the region. Meaning, don't listen to this dude. Iran is being pretty belligerent right now. I haven't seen a public smackdown like that ever. So if we're not even getting along with our allies, let alone attacking Saudi tankers. So we got to keep an eye on this, because even Amazon, the Death Star, can be impacted. All of a sudden, something goes bump in the night and bad things happen. All right. This was phenomenal. If you were a Top Gun Options member 6 weeks ago, 5.5 to 6 weeks ago, in a live trade brief, I predicted this. Trump was walking out to a helicopter, APU running. He was shouting over. He was excoriating Jerome Powell, the Fed chief. He said, the guy's nuts. Not only should he not be raising interest rates, he needs to cut rates and do a little bit of QE, right? Quantitative easing. And people were like, well, I'm like, why would the president be pounding Jerome? The jobs numbers are strong. The GDP is strong, blistering. The economy's doing good. And then it hit me. Actually, it hit me a poke from a friend in a city up north. Said, dude, if Trump walks away, this is his put. The president is going after the Fed as a put in case he walks away from the trade deal. Folks, that's exactly what happened. Yesterday, the president said, hey, man, a Fed rate cut would clinch victory in a trade war with China. Folks, this guy, love him or hate him, he's crazy like a fox. Now he's got two boogeymen. Hey, man, I'm fighting for you in this trade war. For 60 years, we've been getting screwed by China. I'm making it fair. And oh, by the way, the reason your 401k is getting impacted ain't me, it's the Fed. Folks, this is a New York real estate developer negotiating, man. So we predicted this, and it came true. So here we are. Steve Bannon, one of the president's top advisors who left, about a year ago, said there is absolutely no chance Trump's going to back down with this trade war. Well, what the hell's going on right now, Wiz? We had this rip-your-face-off implosion over the president increasing tariffs, and now we got this kind of dead cat bounce going on here. Well, a lot of things going on, folks, and it seems like this is going minute by minute and hour by hour. The latest tit for tat is what? China has cut its holdings of U.S. debt to the lowest level in 2 years. Folks, they are tied with Japan as the #1 foreign holder of our debt. If China wanted to, they could pick up the phone and call Trump and go, dude, we want our money back. I think the last time I did the math, I think everybody in this room owes $172,000 if that happened, including my 3 kids. So this is, remember, folks, the market goes down on uncertainty. Volatility goes up on uncertainty. So right now, things are certain, meaning what? We are increasing fire. And look at this. The president on Monday said the next 3 to 4 weeks will be critical. And on Monday, China fired back with what? June 1st, we're going to smack you guys in the face with increased tariffs. So both sides has kind of given 3 to 4 weeks to go to their corners and kind of Rodney King here. But this is disturbing. Secretary Mnuchin, Treasury Secretary, said yesterday, yeah, we're still talking things. We're China came out yesterday and said there isn't even any plans to keep talking. So it really is the gang that can't shoot straight, folks. But the market action in the past couple days, nice solid rebound. Once something's known, it's known. Folks, this market has gone up when we've been in a trade war, right? Remember the G20 summit down in Buenos Aires? The president and Xi, he said, all right, 90 days. We got 90 days to figure this out. Nobody believed that they could do anything in 90 days, right? So what happened in March? In March, the president said, you know what? Negotiations are going well. I'm not going to increase fire. And then last week, he did. So once things get known again, I think we're going to actually start tracking a little bit higher here. But if the deal falls apart, I think we implode. One of the reasons I like solo Amazon, which we'll start getting into right now, is what? I think Amazon is a little bit more immune. So we had a, kind of sell off with the overall market here with Amazon. But look at that. Amazon, at the end of the day, folks, could care less about a trade war. I get it. Chapter 9 of your Econ 101 book from college says at the end of the day, a trade war hurts consumers. I get that, folks. That hasn't happened yet. Okay. So remember, those who can't teach. So whoever wrote that book ain't in this trade war. GDP is bliss. We had a government shutdown in January. Folks, Democrats and folks were screaming that GDP is going to implode. It's going to be negative for Q1. It was almost a 4, folks. So Amazon, was it JA and Alibaba? Those guys might take it on the chin a little bit, but Amazon is whistling past the graveyard here, folks. And look at this most recent pullback in Amazon. What did it hit? It hit the 50-day moving average and went right up. But let's talk strategically about Amazon. This headline, man, I'm going to frame it. Warren Buffett, I was an idiot for not buying Amazon shares sooner. Yep. Good on the guy for saying it and admitting it, and good on him for when he said that, folks. It drove the stock up 3.5% in a day. We made 65% in a day, about $1,900 on one of our bull put spreads. Boom. Warning, Will Robinson, though. Amazon is a mover. This stock can move $50, $60 in a day in the blink of an eye. So very nice one-day trade there, but it obviously our base trade is a little underwater. But look at the options train, folks. You can hop in your time machine. I'll teach you how to do this once you get into the service. You can hop in your time machine and get bullish on Amazon all the way out to June of 2021 and establish a synthetic stock position in Amazon as a base trade. Look at the XLY. The XLY, you can hop in your time machine and go all the way out and be bullish to Jan 21. Okay. So if Warren Buffett says he's an idiot for not being in Amazon, what do you call yourself, right? What else is going on with Amazon? Look at what this was Tuesday, folks. They announced the carton wrap 5,000 or whatever this is, the HAL 2000. This thing can wrap 600 boxes in an hour. What can a human do? The best human at Amazon can do 200. So can you say, holy efficiency, Batman? So they're not going to need as many employees, but guess what they're doing with their employees? They're offering these employees a $10,000 bonus and 3 months of pay if they quit. You know what the catch is? They have to start their own delivery business. Can you say, oh my God, UPS, you're in trouble? Can you say FedEx? 3 years ago, folks, I'm in a lot of aviation forums. Obviously, I keep in touch with buddies. I found out before the market found out that Amazon was leasing 5 aircraft. Now it's huge. FedEx and this thing is Amazon's in everything, folks. Healthcare, Whole Foods, space, you name it, Amazon Web Services. Google's earnings were impacted last quarter by what? They didn't name the name, but they said somebody's taking a little bit of a chunk out of our online advertising. Fill in the blank. It's Amazon. After earnings a couple weeks ago, they came out with what? 1-day delivery for Amazon Prime. Absolute game changer. Walmart, Target all have to react to that. obviously can't say enough good about this stock, folks. Amazon, Bezos, and he'll send a spaceship to the moon. Here's a potential coin flip, though, that I have to brief you on: the Department of Defense Jedi Cloud contract. It's down to two folks right now: Amazon and Microsoft. One of them's going to win it, and it's going to be a big deal. Why? Because the DoD, the Department of Defense, is usually used as what? The experimentation platform. Right? If the government wants to try something out, they try it in the DoD because all we can do is say, yes, ma'am, yes, sir, and salute and go do it. So whoever wins the DoD contract, obviously the rest of the government's going to follow. Now, if the DoD looks at its boss and says, well, the president doesn't like Jeff Bezos, it'll probably be Microsoft. If they pick it based on who's best for this, it will be Amazon. I think this is supposed to be, I'm here in June, but this article says later this summer. Okay. Having said all of that, welcome aboard. This is solo Amazon, folks. We have our base positions on, like I said, and once you become let's bring up our member page here. So I'll show you our solo Amazon base position and also our XLY. So underneath member content here, we're going over to solo Amazon. Obviously, we have other services here, Top Gun Options, that trade a bunch of different stuff, but this is just for this service. So there is your, oops, let me stop scrolling here. This is the base position in XLY. Synthetic stock out to January of 2021 with a disaster put, and we sold an upside call. That's the base position there. And then we have a bull put spread that's airborne right now. And then here's the base position in Amazon. Let me bring this one up. This is synthetic stock out to June of 21. So we did this a couple weeks ago when Amazon was around 1920. Obviously, like I just talked about, we had gave a little bit of that nice rally back, but we're almost back to, 1906. So we put it on back here. Of course, Murphy's Law, this happens, but we brought in about $2,800 in the past 2 weeks by selling upside calls, even as Amazon went down. Right? And in the grand scheme of things, folks, when you're looking at a June 2021 position, it's going to be up, it's going to be down. I'm telling you, by June of 21, Amazon's a $3,000 or $4,000 stock easily, and this base position most likely will be a six-figure profit. Amazon go to zero, there's my disclaimer. But as I said, doing a solo base position in Amazon only is about 23 grand just for one contract. But again, go back to the whole benefits and pros and cons of just being in one name. Let's take a look at a new position in Amazon, though. And this is actually for my current members, and I'm going to blast this one out. Love this price action here. Amazon pulling back with the overall market, but saying, you know what? We really don't care anymore. We're going to shrug it off. Right here around the middle of this Keltner channel and 50-day moving average, around the 1830 level. Amazon and the overall markets, folks, let's talk about magnet levels real quick. What do I mean by that? Look at the S&P 500. I said the other day, this is no man's land, right? In between the 50 and 200-day moving averages, the market doesn't like to spend a lot of time. Algos, traders, humans, we like that. I call it, World War I trench warfare. This is no man's land. These act as magnets. They either get, as you see the market pounded through it the other day, now it got pulled back up. It was either back up to the 50-day or down to the 200-day moving average. So since, I think the only thing the president's tweeted today is about Bill de Blasio, the mayor of New York City's joke presidential campaign. Not a word about trade. So it's kind of all quiet on the Western front here, or Eastern front. So no news is good news for this market, and we're heading higher. Okay? So if the market acts like a magnet, so does Amazon. If you look at the 1900 levels, it gets pulled up to a round number or down to it. But it also, if it is going to hover, hovers where? Around a 50 mark, meaning 1850, 1750. If it's not up around a magnet of 19, 18, 20, it's around the middle of the magnet, so to speak, around a 50 level. Okay, so I want to take, excuse me, I want to take a look at a bullish trade on Amazon out about a month from now. So I'm going to pull up our options chain here. And if you're new to options, don't trade options, don't worry about it. We have our full throttle program starting next week where you get access to 8 live training sessions. If you don't know what synthetic stock is, or a long call diagonal, or a bull put spread in this case, don't worry about it, because I'm going to teach you all of those things. So let's hop in our time machine. This is the options chain. The calls are on the left, the puts are on the right. I'm going to go out a month, literally a month from now. So Friday is May expiration. May 19 expiration is May 17th. I'm going to go out to the June 19. I am comfortable going out a month in expiration with Amazon. So taking a look at the chart, so we've taken a look at some of the fundamentals of it, from Warren Buffett getting in to just some good solid stuff. It seems like for the past couple weeks, it's just been good news coming out of Amazon. The only bad, actually, forgot to brief this. Here's a bad. Where's the bad? Amazon hit by extensive fraud with hackers siphoning merchant funds. That ain't good. Well, turns out this was a year ago. May 2018, October 2018. So this is just kind of coming out now, but they fixed it and stuff like that. But it's interesting that this didn't make the news when it was happening. So this is a negative headline. This was last week, May 8th. So I have to brief you on the negative as well, but there it is right there. That's a recent negative. But let's take a look. I like this. I like the 1900, obviously. I think the next stop is 1950, 2000-ish. Even if the president starts tweeting again, or trade war, or China retaliates. Remember, China said June 1st. The president said on Monday, we'll know in the next 3 to 4 weeks how this is looking. Folks, in the next 3 to 4 weeks, it is my professional opinion that the market is okay with where we are, right? I get it. The consumer always pays and blah, blah. Folks, that's a ways down the road. I don't think Amazon's going to be impacted. So here's the trade I'm going to blast out, and I'm going to add to our model portfolio. Here it is. I'm going to sell 15. Why 15? Give me about 2 minutes. Sell 15 of the June 19. That's whenever you see a month and a year, that's the regular Friday expiration. So let's go out to June. 1, 2, 3. This trade expires the third Friday of June, which is the 21st. Okay. So I'm going to sell 15 of the June 19, 1850 puts. I already explained to you for about 5 minutes why I'm picking that 1850 strike, and I like it. So when you sell puts, folks, that's you saying, hey, man, Amazon, I don't think you're going to be below 1850 by June 21st. Okay, Wiz, I get it. Selling those puts means you're bullish, and it ain't going below 1850. Yep. What if you're wrong? Well, folks, any trade that we do here at Top Gun Options is hedged, right? This is going to be a spread. So in case, I don't know, breaking news, Jeff Bezos is the Antichrist and Amazon's down, $300. Well, that's going to suck, but we're going to buy 15 of these 1845, these downside puts. So in case Amazon does implode, we're long the stock below 1845. Okay. This tactic, I'm bullish on Amazon. I'm using puts, and it's a spread. This tactic is a bull put spread. Now, if you're new to options, you're probably like, wait a minute, isn't this called something else? Yeah, you can also call it what? A credit spread. If we get filled, and we'll talk about mid-market in a second, we're bringing in a credit of about $2,100, right? So yeah. Bull put spread, it's also called a credit spread, but yes, ladies and gentlemen, it can be called a vertical spread. But I like naming something the tactic that it is, right? I'm bullish, I'm using puts, and it's a spread. So in this trade, we're looking to take in a credit of about $1.45. Now, Amazon's moving all over the place here, but let's go. And in my trade briefs, folks, I give a range for the day. I'd say plus or minus about 10 cents. I'd look to get filled as low as $1.35 or as high as $1.55. If it's outside of those two, it ain't, I might have to move the strikes and longer discussion. But I send out, and I'm going to do it in about 5 minutes, send out a live text alert and an email to all the members, right? Some members couldn't be here, Wiz, I work Thursdays at 1 o'clock. Great. Well, you're going to be in death by meeting, but you're going to get a text alert and an email with the screenshot of this trade in about 5 minutes. And as soon as we get done this trade brief, it's going to take a little longer because we had 3 other speakers, but I post the replay as well. Some people, during their break or, when they get home and the kids go to bed, they watch the replays. All right. So I already took a screenshot of this trade. So let's move to the analysis of this trade. Soon as I click this Analyze tab, I want you to look at one place and one place only, and that is the sad face. It's going to be a red, sad, unhappy face. You ready? 3, 2, 1. Max potential loss. If I didn't, I know obviously all my members in here obviously looked at that first because they're trained. If I didn't tell you to look here first, everybody in this room except my members would have looked at max profit. Hell yeah, I want to make $2,200 in a month. Yeah, who doesn't? Don't look at that ever first. As a fighter pilot, as an options trader, we always, this is why this is called a live trade brief. In the brief, before I went flying over Iraq, I said, what is the max potential loss in this flight? Is that risk acceptable? So I'm going to teach you at Top Gun Options that we have what we call SOPs, standard operating procedures, right? You have to come up with your own trade SOP. For example, for a $100,000 notional portfolio, I don't want to risk more than 5%. Okay, all you political science majors out there, that's about $5,000 on any one trade. That's me. That's 27 years of doing this. I just like a nice, I don't want to risk more than 5%. That 5%, folks, is, or it's just north of $5,000. I'm good. It's based on the 15 contracts, right? Man, I don't want to risk $5,000. Well, okay, good. I can't tell you what to risk. I can't give you individual investment advice. That ain't my job. I'm here to train you. You want to risk $10,000? Do 30 contracts. You want to risk 2,500? Do 7. Whatever it is, you can scale your contracts appropriately for your training. So once I look at this, the first thing I do, my eyes go here, I go check. I acknowledge this risk, Wiz. I am the pilot in command of my own portfolio. I acknowledge that risk. Remember, folks, if you ain't good with that, don't do it, or do less contracts or do more contracts. Now that you put a check mark next to this, just like an aviator, I acknowledge that risk, man. I literally, when I flew that Hornet, folks, when I'd go down to maintenance to go get my jet assignment, they'd give me kind of a phone book sized manual that had all the maintenance and this. And once I paged through all of that stuff, the last page had a space for me to write my name, date, and put my rank. And I literally owned that aircraft at that point. Same thing here. You're the pilot in command. Boom. Now we can pick our eyes up to Mr. or Mrs. Happy Face and go, yeah, hell yeah, $2,200. That's a good risk to reward ratio of about 1 to 0.41. And if you look underneath, using at the money volatility in Amazon options, as I'm speaking to you, there's a 68% probability of making this max profit. Okay, that sounds pretty high, doesn't it? Well, the options trader and Hornet pilot and me go, that means there's a 31% probability of bad, right? But this is what's good about this bull put spread. We make money 3 out of 4 ways with a bull put spread. 3 out of 4 ways this trade makes money. Let's take a look over here at that picture, the P&L diagram. Right now, that blue line is Amazon's current stock price as I'm talking. How do we make money? Amazon goes up. Okay, I got that, man. Duh. Amazon could level off and just stay where it is, folks, and we make money. Check this out. Amazon can even go down a little bit as long as it stays above our break even, which is 18 below, obviously the credit we take in minus that short put. It's right here. So Amazon goes up, cha-ching. Amazon hovers where it is, cha-ching. Amazon even goes down a little bit as long as it's above our break even by expiration. Love, love, love trades like this. Bull put spread. And not to have your eyes glaze over with a discussion about the Greeks, but let's scroll down a little bit here. When you sell something, I'm sitting down here in Fort Lauderdale and I can see the Ferrari dealer from my place here. Casinos, car dealerships like that, folks, they don't look like they do because they give away money. Right? You want to be the house. You want to sell something. If you run into the Fort Lauderdale Ferrari dealer with your midlife crisis and buy that $250,000 Ferrari, pull out of the parking lot, and spin around the block, and then obviously get a phone call from your significant other that tells you your midlife crisis is over, you can take it back to the dealership, and they're going to be happy to buy it back from you for what? For about 200 grand, right? $50,000 in what we call theta, in time decay. That's why you want to be a seller of something, because you get this, right? Time decay. Keep your eye right there as I go forward in time on this trade. You see that theta increasing? Absolutely. Every day that goes by, you make money. Even if you ready? And we have a saying here at Top Gun Options. Everybody knows what this means, right? Unched, unchanged. Unched on the day equals time decay. If Amazon, you get filled on this trade, Amazon just sits here today, you made money. Unched on the day equals time decay. People who, I bought some Amazon shares and I needed to go up to make money. You're like, yeah, I'm bullish on Amazon too, and I made money today. Liar, the stock didn't move. Theta, baby. I made money on theta, on time decay. That's why I like being a seller of options, not necessarily a buyer. Okay. All right. So I am going to go over to here and I'm going to blast this trade alert out. Oh, man. I'm going to blast this trade alert out to my members. Hopefully it's still loaded in there. It should be. Pedro got filled. Good. All right. Seeing some people have filled. Contacts. Let me go over to here and make sure this thing is still loaded up, because I had it in here and I wanted to make sure we're good to go. SMS broadcasts. Obviously, I usually do this live, but as Jody was talking, I already loaded up this trade, so we should be able to fire this thing. Should be good to go. And then, yep, absolutely. I will tell you how to get airborne with this. This is our lowest cost service. Elaine got filled. Let's go here. I think we're good to go. Let me, it's already in here. So let's go. Contacts. We are in solo Amazon right there. It only takes about a minute or 2 minutes during the brief to blast this out, but it's great because literally if you're not there, you're still getting it. Actions, apply, remove tag, and I'm going to fire this. And in a couple minutes, not a couple minutes, it's actually usually like I think the slow. Oops, this one's already here. Yep, this one's still sitting here. All right, fire. So there we go. That trade is going out to your to all of my members' cell phones and also their email. So we'll take a look at my phone here in a couple seconds. But yeah, absolutely. Obviously, I'm going to tell you how you can get airborne into this service right about now. Let me go ahead and grab this. Let me go over to my email and this thing's firing. Yeah, you bet. Once you join, you get access. You can watch the replay and see those base positions, how we put them on, and what they would, what a good one would be today. So yeah, absolutely. And my phone, there you go. My phone just buzzed, and there is the text. All right, so let's talk about how you get airborne into this service. And yeah, we're having an absolute blast in this service, guys. It's fun. It's just one name. We love trading the Death Star. So this is, well, let me get out of this. As I said, can attend. We got the, this is what the text alert looks like. Obviously, I couldn't screenshot the current one I just got, but here you go. This is what the text alert looks like. Top Gun Options. It tells you exactly what the trade is, and then here's what happens. You get the email, right? The email with the trade in it. It looks exactly like this, so you don't have to be here, and then you get access to the replay. Here's what I'm going to do today, too. I'm going to give you access to our 3 manuals, right? Our primary, intermediate, advanced workbooks. You can download these. These are yours to keep. They're about 190. They're not about. If you went to the homepage and tried to buy all these individually, $197. I'm going to throw those in today. So here's what you're going to get: access to our weekly Amazon live brief. It's every Monday at 3 o'clock, and obviously XLY. You're going to get text and email alerts about the trades. You also get access to our online forum that we call the Ready Room. That's where you can interact with me, your fellow traders, ask questions, and get your questions answered. And you're also going to get access to those three manuals. Take a look. Don't listen to me. Look, Greg. Greg, I think you're in here. I opened my Jan 21 long call diagonal on Amazon on March 8th. I'm up 31%, almost 15 grand in 8 trading days, guys. David's in here as well. Got out yesterday for 72% profit, but my Jan 21 is up 40 grand, folks. 40 grand. Scott, Amazon up 11 grand on one contract. Thanks for the idea. Kevin, you're in here. Kevin is an Amazon student and loves it. Amazon synthetic stock, late to enter, but up 200%, paid 8 grand. It's up to 24. So obviously you're shelling out a little bit of coin at the beginning to get into these, but they're looking good. Dennis, 72.40, closing out a VXX and Amazon trade. Greg, again, 16 grand. Whatever. I'm not going to give you all these case studies, guys. Just know that this works. It's a great time. It's our newest live trade brief. We cover Amazon. We also do XLY. Here's the cost, folks. This is our cheapest subscription, right? Cheapest. $97 a month. I went out last night, took my 2 sons out to dinner. That was the bottle of wine, man. It's a bottle of wine, essentially, a good bottle of wine for membership here. Or you can do $897 for a year, and that'll be a 25% discount. Obviously, if you do an annual membership, we'll give you a little bit of a discount there. So here's what you need to do. Head to go.topgunoptions.com/solo. Pretty easy to remember, and I can paste that in here. Let me go grab that link. Oh, there it is. I meant to show you. So here's the email, folks. I got that a minute after I sent it. Look at that. So at the top of the email, you know what I do? I paste in the text alert, right? So you got the text on your phone anyway, but I still paste it in there. Here's the screenshot of the bull put spread, and there's the trade metrics, all in your email right here. And obviously, like I said, my phone, yep, it buzzed because that was the trade alert. So there you go. Perfect timing. All right, here we go. Let's get you to the right page. Solo is where you need to go. And it redirects. Yeah, it says solo Amazon order. So yeah, let me paste this into the chat box here. Go.topgunoptions.com/solo. $97 for a month. Try it out for a month, folks. But I'm telling you, I've done a ton of coaching over the years, and it really does seem like folks are, kind of going this direction. Cleaning up their cockpit, going from that, F4 Phantom to the Joint Strike Fighter. So as I said, $97 a month or $897 a year. Okay. All right. Have a couple minutes to take some questions. Let me. Here's the base positions. This is the base Amazon that we got into. If you were going to do a new Amazon trade today, obviously I got into it, the synthetic stock at 1920. You'd be doing it at whatever Amazon is right now. Maybe the 1900 strike is what you do. So yeah, as soon as you sign up, you're going to get an email with the username and password. Log in and head right to Solo Amazon, and you can see all of our existing positions. Okay. Yep. I mean, this week we what was it? 1 day profit when Amazon imploded. I sold these 1850 calls, and I closed it for like about $1,300 in a day. Just bringing in some nice coin. I got my base position that was a little bit underwater, but I brought in some premium by just selling that upside call. Isn't that awesome? Carrie, yeah, you wouldn't do Amazon, you would do XLY. So that's why, we call the service is called Solo Amazon, but we also do XLY because it's a lot cheaper than Amazon. You see this right here? New XLY base trade. So this, if a smaller account like that, you wouldn't be able to do the one contract in Amazon. Guess what? You do XLY. So we cover both of these in every live trade brief, Amazon and XLY. You just you just do the XLY. Okay. And we actually put on a bull put spread the other day, the 115, 114 and a half on XLY. Let's see what XLY is doing today. I think so yeah, that bull put spread's looking good. Let's bring this up. The 115, 114 and a half out to the end of May. Let's see how that one's doing. End of May, 115, 114 and a half, right? Yep, 114 and a half. 114 and a half. Okay, we have 150 contracts. That's at 11 cents right now. What did we look to get into it for? Oh, all right. Yeah, actually, this is a great trade. It's at it's at 12 cents right now, and this is at 12 cents. So this is the existing bull put spread right there. So now, Rick, I kind of covered that. I think the way Amazon's reacting now and over the past couple of days, it's kind of it did a sympathy pullback with the overall market and the trade war fears, but I think I think we're kind of done with that. Even on, so if between now and June 1st, like the president said, hey, next 3 to 4 weeks we'll know something. If we kind of back away, I think we have a rip your face off rally. If the Chinese increase fire on June 1st, it's known. They gave us a 3-week heads up. I think this little near-death experience is it. That was it. Now, if he no kidding says we're done, we're never talking to him again, obviously I think everything kind of pulls back again. But markets go higher, folks, over time. The internet implosion in 2000, the financial disaster in 2009, 9/11, the crash of 87. We're Americans and we recover. Markets recover. So even if Trump just said, you know what, forget it. I'm happy where we are. I love the money we're bringing in. We're staying here. I think Amazon just kind of blinks and keeps going higher. I mean, it's its own stock market, folks. So. Can you go over the new XLY trade like you did with Amazon? Curry, you got to join. I always get grief from my marketing folks that I give way too much away in these briefs. So you got to sign up at this point, guys. It's really easy to do. It's $97 a month. Go.topgunoptions.com/solo. $97 a month or $8.97 for a year. So. Okay, guys, I'm going to get going because it's going to take a while to render this recording. I actually have a couple coaching calls, and I need to take a look at some other trades. Thanks, Carrie. I appreciate it. Welcome aboard, hopefully. Above 3. Yeah, I'd agree with that, Rick. So, but all right, guys. Hey, great day today. Thank you for coming to the multi-speaker event. I had about 500-600 folks registered. We got a great crowd in here right now. Make sure you head to go.topgunoptions.com/solo. $97. Get airborne, and I'll see you Monday? Yeah, Monday afternoon for our next solo Amazon session. As soon as you get your login, come in here on the solo Amazon member page and take a look at the existing positions. The current bull put spread is still good on XLY. You could get into that one today too. So now you got potentially 2 trades for the price of 1. Thanks, Lee. I appreciate it. It was a good event. Loved all the other speakers. They did a great job. We'll do another one of these maybe in a couple months. As a reminder, on Monday night. So Monday night at 7 p.m., we're going to start our new full throttle training. Oops, I forgot to press send on that. There's the link, guys, in the chat box. Duh. Go.topgunoptions.com/solo. I forgot to press send. But if you want to join us next week and check out our other services, I'm gonna open up our primary live trade brief on Tuesday, our accelerated retirement trading on Wednesday, and then Tuesday night I'm going to kind of give a sample of what you get with our full throttle training. So this is the industry leading full throttle. We're going to start Monday night. Monday night's kind of the welcome aboard brief. Since you attended this one, you kind of got who I am and what TGO is, so you can maybe blow that one off. But make sure you come to the rest of them next week, and I put that link in the chat box as well. This is free. Full throttle's free next week. I open up the doors to our squadron, but solo Amazon isn't going to be in full throttle here. So make sure you grab a full throttle slot for our open house next week. All right, guys, I got to get going. Have a great rest of your day. Happy hunting. Make sure you hedge. Got a lot of buzzing on my cell phone, which means a lot of folks are signing up. Welcome aboard to all of our new solo options members. Have a great rest of your day. Happy hunting. Make sure you hedge. God bless, and welcome aboard Solo Amazon. We'll see you.